Hello. Sure. Very good morning, everyone. How are you all? Everyone fine? Bata. Any doubt for MCQs first? Previous chapter, any MCQs doubt? IND AS 12. Come to IND AS 12. Okay, sir. IND AS 12. Bull. What is the doubt number? Question number? Question number 2. A Limited has an item of PP whose cost is 10 lakh, is fully tax deductible, deduction being given over a period shorter than a period over which the asset being depreciated under IND AS 16. At the reporting date, the asset has depreciated to 5 lakh for financial reporting and 3 lakh for tax base. So this become carrying amount, has been depreciated to, means this is carrying amount, and this is the tax base. What should be the accounting base and the tax base? The accounting base is what? 5 lakh. Tax base is what? Tax base is the asset has been depreciated. Oh, sorry, has been depreciated to. Means this is what? Depreciation amount. Sorry, this is depreciation amount 5 lakh and 3 lakh. So what is the tax accounting base? 5 lakh. Tax base becomes 7 lakh, and the difference is what? This is deductible temporary. So this become a deductible temporary difference now. Option is not correct. I think option is not correct. Option is not correct. ठीक है. You can understand something is wrong in the question only. Something wrong in the question only, because this become what? Deductible temporary difference is fully tax deductible, deduction being given over a period shorter than a period over which the asset is being depreciated. The asset has been depreciated. Actually, from my point of view now, the asset has been depreciated to rupees itna and 3 lakh for tax purpose. पता नहीं language भी ना. Something is missed. Something is locha in the question only. ठीक है ना? This question I have taken from what? GFRS only. So I think there is some locha in this question. चलो ignore the question. Ignore. Okay. Ignore this question. चलेगा? ठीक है. Means in exam आपको they will give correct question only. Okay. Any more doubt? In this no doubt. ठीक है. Okay. There may be some this type of question because I have also not gone through all the solution till now. I have just copy paste question from some resource and then I have not gone through. Okay. If there is no solution given, then I have referred it. चलेगा? ठीक है. Okay. Then financial instrument. So it is where. Which question? Question number 12. Come to question number 12. All question done for this. ABC Limited has invested a debt oriented mutual fund. The investment should be subsequently measured under. So this is not IFRS. So this question might be I have taken from some international book. ठीक है ना? I think you have understood the emotions. So this is IND AS 10. It is IND AS 109. So ABC has invested in a debt oriented mutual fund. The investment should be subsequently measured under. Correct now. Now Just try to, nothing has been given. So normally what happens ki mutual fund may be what happens ki it is normally measured NAV, net asset value, correct na. So normally what happens ki it is of course the answer is given FBTPL. So you might be thinking why it is FBTPL, why not FBTOCI? It can be also FBTOCI, because what happens ki it is normally hold to collect contractual cash flow, and but what happen in that they normally what happen, we do not have any amount to be collected. It is only when you sell you will get some amount, correct now, means when it is matured you will get some amount. So we are not collecting any principal or interest amount on that, understood. But the reason is being given, this will be debt instrument, but return are linked to the capital value change, means only we are getting a capital appreciation on that, and hence it will fall the SPPI means that investment test, and hence it is FBTPL. So it will fail. SPPI means it will fail sole principal and solely for payment of principal and interest. That condition will be failed because it is not for collection of any contractual cash flow. This will be FBTPL. Understood now? Correct. Means some doubt may come ki sir why it is not FBTOCI, because there is no contractual cash flow. Any more doubt? Only one doubt. This was the doubt. Sixth, in this chapter only. 6. Ayushman Limited investment in Dinka Limited does not provide Ayushman Limited sole control, joint control, or significant influence. Means there was no it is not outside the scope of this chapter, correct. The investment was purchased for 50 million. The investment was classified as FBTOCI. The fair value of investment was 60 million. In the tax, you are saying tax rate is not given. So of course tax rate, it might happen it has been missed. So just write down tax rate. What is the answer based on that? What is the tax rate? So assume tax rate is 20%. In exam tax rate will be given. In exam tax rate, but you are getting the answer now with 20%. So tax rate will be given in the question. Just write down tax rate. Any more doubt? In the hint it is given only 20%. So actually I have taken this question from a big case study. So tax rate might be given in some other para that I missed it. Okay. Okay. Chalo. It is all my mistake. Okay. Then any other question? 20 seconds. Only one student has done. Others are silent. Correct now? 20 seconds. Flying Airways Limited delivered the quantity of aircraft component to a customer on 31st December 2018. The invoice amount is 5 lakh. The company expected to receive payment on 28/5/2019. 28/5/2019. So 31st December 2018, and the payment will be received on 28/5/2019. Means after how many months? 2 months. However, no cash was received till 31st March 2019. Means 31st March 2019, no cash has been received. On 30th April, the Credit Control Department informed that customer has major cash flow problem as a result of failure of one of his projects sometime in Feb 2019. They have agreed to allow the customer to settle the debt until 31st March 2020, by which time the customer is confident that cash flow problem will be resolved. Though Flying Airways Limited currently expect that annual interest rate is 6%, that is effective interest rate, can be received against any money lent out, yet it will be allowed the customer an interest-free payment period. Means what is the EIR given? 6% is the EIR given. Okay. So which IND AS is applicable for the accounting treatment? Of course it is IND AS 109. We need to apply what? IND AS 109, and of course it is after balance sheet date. After balance sheet date na. So IND AS 109 and IND AS 10 you can say. IND AS 10 and IND AS, which option is correct? I think option D is more correct. IND AS 109, IND AS 10. आई थिंक इन दिस तो नो डाउट. ठीक है. Calculate a closing balance of trade receivable as at 31st March 2019. So closing balance is what? What is the amount receivable? What is the amount receivable? Now amount receivable will be after, on which date? On 31st March 2020. So it will be 31st March 2020. What amount will be receivable now? 5 lakh will be received, because if they said now pay on this date, so we need to discount at what percentage? 6%. What amount is coming, Bada? At what amount is coming? So this is the answer. So what is the doubt in this? Whenever this is a question of impairment, now they said ki now you pay the amount after 1 year, and the effective rate of interest is how much? 6%. So that will be the amount to be recognized on the balance sheet date. This is become amount to be recognized. And suppose this amount is 4,71,698, and the amount was actually recognized at 5 lakh. Correct now? So the difference will be what? Impairment loss. The difference will be impairment loss. I think that question they have not asked, no? That point they have not asked. Understood? I think they have given also 5 lakh minus this become what? Impairment loss. In the solution, in the hint they have given, so they may ask that question also, what is the impairment loss? So impairment loss will be 28,302. Good question. I will say this is a good question. This is a good question. MRQ. Then only 2 doubt. Out of 32 doubt now, means confidence coming. Confidence coming. Chalo, good. Means other question you have done with hint or without hint? Other question you have done with hint, without hint, na? It means confidence coming or not? It means okay. So out of 30 question, only 2 doubt came. One is genuine doubt. This is genuine doubt. Another was so simple doubt. Okay? Very good. Any other person have doubt? Not yet done. So you will do after exam. This all MCQs you will do after exam. When you will do? Huh? After exam? No answer only. After exam, before exam? Just before exam, 1 day before. So how many days before? Huh? Acha, after batch. After batch, you are waiting for the batch to be over, then you will take relaxation, then aram se karenge, correct? Okay, chalo, theek hai. One more doubt came. 109, question number 37, point number 4. Question number 37. Question 37. So many questions are there. This is a good question. This question I was thinking, let us delete this question, but then also I have taken, because this question I have taken from GFRS. GFRS, now same question can be asked, so I have not deleted this question. ठीक है ना? But थोड़ा सा अच्छा question है. ABC Limited present equity shareholding structure is given below. You can see AB 90 lakh, means they have given class A equity shares, class B equity shares. The holder name is what? AB. They are holding 90 lakh, 85 lakh. CD, this. CD is a private equity investor that infused 1000 crore. 1000 crore in ABC Limited. Class A shares 400 crore and Class B shares 600 crore. Okay. On 31st March 2011, at a valuation of 8,000 crore. At a valuation of 8,000 crore on a fully diluted basis. Okay. ABC Limited has entered into a shareholders agreement. ABC Limited has entered into a shareholders agreement with the shareholders, as per which the terms of Class A and Class B of equity shares are as under. Class A equity shareholders are entitled dividend at the discretion of board of directors. So this become equity. Class B equity shareholders are entitled to a fixed non-cumulative dividend of 10% subject to availability of profit in that year, and the distributable cash as on the balance sheet date of the relevant year. The profit of ABC Limited are to be determined as per the statutory financial statement of ABC Limited. Distributable cash is defined as free cash and cash equivalent available with the issuer. The projection of profit or loss and the balance of ABC Limited for the 10 years subsequent to the private equity investment. The projection of profit or loss and balance of ABC Limited for the 10 years subsequent to the private equity investment is given on an estimated basis. So you can see they have done 2012 to 2020. 2012 to 2021 they have given some projection. Opening cash and cash equivalent they have given. Profit as per IGAP financial statement they have given. Depreciation as per IGAP they have given. Impact on profit or loss due to IFRS conversion means IFRS को IND AS कर दो हाँ IND AS conversion means from AS to IND AS conversion. So this question also you can understand when there was IFRS in GFRS material that question was given. So ignore IFRS now. IFRS को substitute कर दो with IND AS. Each class B equity shares is converted into class 1 class A equity shares at the end of 10th year from date of infusion of fund by CD. Dividend of 30% is paid for similar instrument in the industry. So this will become market rate of interest. This become what? Market rate of interest. What will be the classification of class A equity shares by ABC Limited? Class A equity share will be classified as compound, no? So class A, so there is no doubt. I think it is D as equity because the dividend is given as per the discretion of entity. So for class A, no doubt. For class A, what? It will be classified as equity. Option number D. What is the classification of class B shares by ABC Limited? So can I say class B because the dividend is what? The dividend is mandatory. You need to pay dividend based on what? Some contingency. Some contingency means availability of profit. So whenever there is a contingency, whether it will be financial liability or equity, financial liability, and for principal amount there was no obligation to pay, it will become a compound financial instrument. So option number D is also correct. Good question. It is a good question. Such a big question, then answer is very simple. Okay, na? So this type of question become difficult in exam when you are not able to understand the question information only. Okay, therefore I have taken this question. If suppose same to same question come, you will take less time in exam. First I said let us delete it. Then I said एक question करने में क्या जाता है? We have done so much and suppose same question come, so you can do it now. So the intention was that. What will be the journal entry including amount thereof to be passed in respect of initial recognition and measurement of class A? It is bank account debit to equity. Bank account debit to equity. So for this to very easy, bank account debit to equity. What was the amount? And what amount was what? 400 or 1000? 400. So bank account debit to class A equity shares. The option number A is correct. Now, what will be the journal entry for class B? The journal entry bank account debit to financial liability to equity. So bank account debit to financial liability to equity instrument. So correct entry is this. That means you can't means no if your concept is strong. This is not correct. This is not correct. This is not correct. This is correct. Means you are not supposed to calculate also na. Why to calculate? Correct na. Amount you don't require. So देखो option number C, smart work. Option number C. Now they have given how to calculate this. They have given as a hint. Now if they ask reasoning, then you need to give this also. If they ask reasoning means it become a 2 marks question. Reasoning means it become 2 marks question. Without reasoning means 1 marks question. Are you getting? So I don't know whether they will ask reason or they will not ask reason. Whether they will ask reason or they will not ask reason, that we don't know. But sometimes they ask reason also. So reasoning means 2 marks question. So for 2 marks, this much calculation is required. For 1 mark, smart work is required. If suppose they have given 2 journal entry with the same journal entry with different amount, then you need to do calculation. So it is also quite possible. Correct. So how to calculate this amount? I will just explain with what the solution only. But the opening cash and cash equivalent given. Opening cash and cash equivalent given na. So opening cash and cash equivalent given. Okay. Correct. Yes, sir. Why this amount is not there? I think there is some typo mistake. Chalo, this is given 104 and 104. I think there is some typo mistake. Okay, this is opening cash and cash equivalent. This is opening cash and cash equivalent. This is 100. Okay, you can correct it. Then they have given profit as per IGAP instrument given, depreciation as per IGAP given, impact on profit or loss due to IND AS conversion that is given. Now point number E, dividend as per the information given, dividend will be what? If you see the question, so what they have given about dividend, the class B equity shareholders are entitled to fixed non-cumulative dividend of 10% subject to availability of profit in the year and distributable cash on the balance sheet date of relevant year. So they are getting 10% dividend. So 10% of what? 10% of capital subject to availability of what? Profit. So profit should be available subject to availability of distributable cash on the balance sheet. So can I say it will be 10% or profit or cash, whichever is lower, now profit should be also available, cash should be also available. So we can say whichever is lower. So first calculate 10%, then calculate profit, then calculate cash, whichever is lower, that become the dividend. Understood what I am saying? The profit of ABC Limited are determined as per the statutory financial statement of ABC Limited. Means as per the SOPL, the profit will be as per SOPL. And distributable cash defined a free cash and cash equivalent with the issuer. So that is given only free cash and cash equivalent given also, correct? So let's see what they have given. So can I say this dividend will be with effect less of A, less of B, and less of what? B is what? Profit or loss as per IGAP, and E is what? Dividend rate of 10%. 10% we have calculated on capital. So these or these or this, whichever is lower. Understood? Correct. So you can see the profit was negative, it become nil. Here it become nil. So here it become nil. Now in this 8, 10 and 100. So 8 came, here 6, 13. If something is, I think typo mistake is there. If something is typo mistake, just correct it. Okay, I think some amount is typo mistake. So you can calculate this, then calculate what? Present value at what? 13%. This answer you get, and then that will become what? Amount of financial liability. So present value of this will be the amount of financial liability. I think there is some typo mistake here. Just check it now. Can you correct me? This, you have the answer. What is this? First one is what? 100 now. Second one is what? You don't have question. Second one is 85, then 16. Write down somewhere now. 85, 16, 8, 2, 8, 26. Write down. You don't have question. अरे क्वेश्चन खोलो यार, सब नालायक है. बताओ. 185, 16, 8, 2, 8. This is 26 ना, therefore doubt आया. उसके बाद 48. Then 104. Correct. Now take the lower one. So this is lower, this is lower, this is lower, and this is lower, and this is lower. So that is only taken. Yes or no? Huh? This is also not correct, na? There is some typo mistake. Okay. So 25. Now this will be lower. Correct. Now take what? Present value of this. That will become liability component, and the difference will be equity component. So intensely I have taken this question. Suppose this question come, you should be able to do it. But the answer is very easy. If you do smart work, then this calculation is not required, because they have given only one option of this nature. Chalega. Good. Done. Next point. Financial asset and financial liability classification of financial guarantee given and received explanation. Now financial guarantee given, just try to understand financial guarantee given. So that will be what? A financial, whenever I am giving a financial guarantee, so in the books of parent company, right? Just last class we have done. So in the books of parent company, whatever financial guarantee given is what financial liability. It is a financial liability. And if you are receiving any financial guarantee, so that will become a financial asset. But however, we are doing accounting treatment only in the books of parent company. So from parent company point of view, it become a financial liability. Last class we have done that. Chalega? Yes, sir. Chalo. Any more doubt? This question also write down MRQ. You must do. Good question only. Any more doubt? Chalo. So now we'll start consolidated financial statement. Now consolidated financial statement, we need to have understanding of IND AS 103, then IND AS 110, then IND AS 111, then IND AS 28, and then IND AS 27 for separate financial statement. 103 and 110 will be required for subsidiary company. 111 is required for joint operation, and 28 is required for joint venture and associate. Joint venture and associate. This will be in CFS. However, this is for separate financial statement. Separate financial statement. So first we'll take only subsidiary into consideration. Now whenever I am saying consolidated financial statement from examination point of view, what are the points which we need to understand? First we need to understand how to calculate goodwill. Goodwill adjustment. Then second, we need to understand NCI, non-controlling interest. Then we need to understand abnormal loss adjustment. I am just giving the point which we need to understand. Abnormal loss adjustment. Then we need to understand dividend adjustment. Then we need to also understand bonus share adjustment. This is only because of last attempt question bonus share. Then we need to understand what? Fair value adjustment. Correct? Got this point? So this much adjustment is required for any question of consolidated financial statement. Now whenever questions come, first we need to perform a working note of fair value adjustment. This you can write down. Fair value adjustment. So first prepare any working note of fair value adjustment. Means if there is some fair value of INA given, I am assuming that you know all the terms. In this chapter I am assuming that you know INA, you know fair value adjustment, everything you know. Because I am not going into the concept clarification. I am just giving from examination point of view how to work out this type of question. So first come to fair value adjustment. Identify, one more point, deferred tax adjustment. So first perform fair value adjustment. In this identify the asset for which fair value has been given. Suppose PP given, inventory given, trade receivable given, trade payable given. From the examination question point of view, I have seen they give only this. Correct? With one more they will give provision. Means I am just taking all the question into consideration so that you can understand what I want to say. First find out fair value on the date of acquisition. Fair value on the date of acquisition. So what is the meaning of date of acquisition? Date of acquisition means when the control is obtained. So first find out fair value on the date of acquisition. That will be given in the question. That you write down. Because that is not given, so we will assume fair value is equal to carrying amount. I hope you are understanding. Then we will find out carrying amount of such asset on the date of acquisition. carrying amount of such asset on the date of acquisition. Normally this will be also given. Normally I am saying this will be also given, but for some time for PP, normally for PP they will trouble you, and they will give you either opening balance of PP or they will give you closing balance of PP. So from opening balance, suppose they have given this is the date of acquisition. This is the date of acquisition. Understood? And this is 1/4 and this is 31st March. So if they have given this, you can find out this by applying rate of depreciation. And if they have given this, you can do back calculation and you can find out this and then find out this. Correct now. So either they will give opening balance or closing balance. So from that you need to find out carrying amount on the date of acquisition. Carrying amount on the date of acquisition. So they normally trouble you in exam by giving that type of information. But you need to find out carrying amount on the date of acquisition. Carrying amount on the date of acquisition. In which books? In the books of Enquiry. In the books of Enquiry. Can you say this difference will be what? Fair value gain or loss. This will be fair value gain or loss on the date of acquisition. This is the fair value gain or loss on the date of acquisition. So this is the objective to calculate this. The objective is to calculate fair value gain or loss. Sometimes they give changes in the value. So they have given changes. It means they have given what? Fair value gain or loss. So be careful. Sometimes they will give you this only. They have given this. If they have given this, so there is no need to find out fair value and carrying amount. We should say thank you very much because we want changes and they have given changes. Yes or no? If they have given changes in the value of assets and liability on the date of acquisition, we should say thank you very much because we are going to calculate that only. If not given to calculate it, fair value minus carrying amount on the date of acquisition. On the date of acquisition. Be careful. On the date of acquisition. On the date of acquisition. The fair value will be given on the date of acquisition, but carrying amount may not be given on the date of acquisition. So do calculation to calculate on the date of acquisition. Correct. Once you have calculated, so this become the fair value gain or means increase or decrease on the date of acquisition. Correct. After this chapter, once again I will say that every teacher have a different style of teaching. Correct. So if you have done from other teacher, don't be confused with my teaching. Correct now. Because ultimately the end result remain same. Ultimately the end result may remain same. And if you are following ICAI solution, there is a Tufan. Means every question they have given different type of solutions. If you are following that, follow that, your choice. But I will give you simple way in exam how all questions can be done. How all questions with one calculation can be done. Now after this what you do? You will do post acquisition adjustment. You will do post acquisition adjustment. I hope you are understanding. Post acquisition adjustment. So post acquisition adjustment means, can I say additional depreciation? Additional depreciation during post acquisition period. Additional depreciation. So can I say on PP to find out additional depreciation? Additional depreciation. Correct. Similarly, here also we'll do post acquisition adjustment. Post acquisition adjustment. So for this we need to find out depreciation. Correct now. After doing post acquisition adjustment, this become what? This information become net increase on the date of net changes. It is net changes I am writing. Net changes on the date of what? On the date of consolidation. On the date of consolidation. So on the date when you are preparing consolidated financial statement, that become date of consolidation. Means it is nothing but reporting date. This is nothing but reporting date. Understood? Have you understood this point? Now about depreciation, let me first clear this point. This point first. About depreciation. Now the question is that how to calculate additional depreciation. That is based on what? SLM or RBM. SLM or RBM. If question is silent, you will follow SLM or RBM. No, 100% wrong. If question is silent, always follow what? RBM. Kasam khalo. If question is silent, always follow RBM. If question is silent, always follow RBM. If you are following SLM, initial mistake, because working note number 1 mistake, it will affect all working and 60 marks question become what? 1 marks. They will give you 1 mark. They will not see what mistake, 1 mistake you have done, but khatam ho gaya na? Because this impact will go to all working. This impact will go to all working. So it is quite possible the question is silent about what? Method of depreciation. If question is silent, always follow what? RBM. Understood this point? Now when I am saying SLM, it is very simple. SLM means what? Just find out fair value, gain or loss whatever fair value gain or loss you have calculated, means this amount multiplied by what? Rate of depreciation. For which period? For post acquisition period. For post acquisition period means 3 months, so 3 by 12, 6 months, so 6 by 12. Understood? So this become what? Fair additional depreciation or saving in depreciation. If I am saying gain means what? Additional depreciation. If I am saying loss means what? Saving in depreciation. Loss means saving in depreciation. I hope you are understanding this point. Have you understood? Correct? Any doubt for this? So can you say, if you know it is SLM, you can calculate easily. Now if it is RBM, so how to calculate additional depreciation? So for this you will take first fair value minus what? Minus fair value minus what? Minus opening balance of PP of that year. Correct? Fair value minus opening balance. Understood? Into what? Rate of depreciation into for what? Post acquisition period. This will be the additional depreciation. This is the additional depreciation. It means what is the meaning of this? The parent company will charge depreciation on fair value. For the post acquisition period, but subsidiary company has already charged on what? Opening balance. So difference become additional depreciation. Or saving in depreciation. If there is a gain, so it will be additional depreciation. If there is a loss, it will be saving in depreciation. Understood? This point normally student do mistake यहाँ पर जबरदस्त mistake होता है. Means most of the student will do mistake. They know everything, but in exam they will do mistake. I don't know why they do mistake. This is the point where student normally do mistake. Correct? Understood? So can you say this additional depreciation you understood? This additional depreciation you understood? Bolo. Have you understood the additional depreciation? Yes, bolo. Then I will proceed. Have you understood additional depreciation? So I will take only one question after this. So practice you are supposed to do, but I am teaching you such a way that all question can be done. So इसको लिख लो. And if you are following other teacher, just modify it. थोड़ा सा. Are you getting what I am saying? Correct. Oh yes, sir. Now coming to inventory, can you say when inventory is there, so can you say additional expense will be increase or decreasing cost of sale? So this additional means what? Whatever has been sold during the year, that will be what? Additional expense. Suppose the inventory taken is 20,000. The fair value gain is 20,000. Out of that 20% sold. So 20,000 ka 20% become what? Additional expenses. Because can you say that will increase the expense during post acquisition period because that has been sold. So once sold, the inventory become expense. So can you, during the post acquisition period, if it is sold, so this will increase the expense in what? Consolidated SOPL, and this remain unsold. This is unsold portion. So suppose 20% sold, so this is 20% of this, and this is 80% of this. Correct? Simple. Now coming to what? Next, trade receivable. Trade receivable means whatever has been received, that will be यहाँ पर. If suppose entire amount received, so minus receive, and this is what? The amount not collected. Understood? Not collected. So out of suppose this amount, 20% collected, so 20% will be this and 80% will be this. Correct? Similarly, if it is trade payable, so this is the amount paid during what? Post acquisition period. And this is what? Not paid. Suppose question is silent, so what will assume? Paid or not paid? If question is silent, what will assume? Paid or not paid? Not paid. If the question is silent, receive or not receive? Not receive. If question is sold or unsold? Unsold. So this will be general assumption. You have understood? Correct? Yes, sir. Now for this, if suppose, what is one point? Ki any contingent liability of Enquiry, will be recognized as a provision in the books of acquirer at fair value. So any contingent liability of Enquiry will be recognized in the books of acquirer at fair value. So this will be some amount, and this will be zero. This will be always zero. because carrying amount is 0. I hope you are understanding. So if it is paid, so this will be this amount. If it remain unpaid, so this will be amount. I hope you have understood. If it is paid, this will be post acquisition adjustment. Post acquisition adjustment. Understood? If nothing is given, we'll always assume it remain unpaid. This is the fair value adjustment. I hope clear. Any doubt? One by one we'll take. Any doubt in this? Then first you ask me that. Bolo. Any doubt in this? Last one I said provision. So normally देखो, I am just taking overall point of view कि what type of question they have given. So normally they will give contingent liability of what? Acquiry. So contingent liability of acquiry as per IND AS 103 can be recognized in the books of acquirer at fair value. So if fair value is given, that become provision of what? Provision in the books of acquirer on the date of acquisition. Carrying amount is what? 0. So carrying amount 0. This become fair value loss. So increase in liability means what? Increase in liability, increase हो गया ना? So that is a fair value loss. Now if that amount is settled, so do minus post acquisition adjustment. If that amount is paid during post acquisition period, so that becomes 0 now. So closing balance will become 0. So if suppose this is 10,000, an amount paid, so minus 10,000 will do now, and this will become 0. So post acquisition adjustment will be what? Minus 10,000 minus 10,000. Understood? Have you understood this point? Now understood? Have you understood? Any more doubt? So chalo. Done? Can I proceed? Working note number 2. Now after this we'll do what? Working note number 2. That is analysis of what? Profit. Analysis of profit. So normally they will give what? Retained earning and general reserve. Normally they give these two retained earning, these two reserve and surplus. But I am taking one more. Suppose they have given revaluation surplus also. Suppose they have given revaluation surplus also. Till now not given. Suppose they have given revaluation surplus also. Are you getting what I am saying? Miss some OCI. This is OCI component now. So this is analysis of profit of which company? S Limited. S Limited means this is fair value adjustment of which company? S Limited. Everything S Limited. We are doing all adjustment for subsidiary company, nothing for parent company. Understood? The analysis of profit of which company? So first find out closing balance. Can I say closing balance will be given in the balance sheet? Closing balance will be given in the balance sheet. Then find out opening balance. Opening balance will be given. Opening balance will be given the additional information. Opening balance will be given in the additional information. This you find out. This you find out. Correct. Now suppose opening balance of retained earning is not given. If the opening balance of retained earning is not given, then what you will assume? If the opening balance of retained earning is not given, then what you will assume? Huh? No, you will assume nil. You will assume nil. Because you are saying same. If you have taken that assumption means gaya kaam. So there are some standard assumptions in this chapter that only you need to follow. So you can't say equal to opening balance, then the profit of the year becomes 0 na. Profit of the year becomes 0, then what you will transfer to parent NCI? So that assumption is not correct. So if opening balance of what is not given? Retained earning is not given, then what you will assume? But if the opening balance of any other equity is not given, then assume what? Equal to opening equal to closing balance. My mistake. Equal to what? Closing balance. Equal to closing balance. If not given, then. If not given, then. Now find out difference. Find out difference. Difference find out. So difference you can calculate. Difference you can calculate. Got this point? Then in this first add plus abnormal loss given in the question. Any abnormal loss. So normally abnormal loss is added to retained earning. Abnormal loss plus abnormal loss. If given the question, till now no question of abnormal loss given in ICAI study matter here. But if there is any abnormal loss during the year, add abnormal loss. Add abnormal loss. Chalega? Then plus final dividend paid. Any final dividend paid. Final dividend paid means what? Any dividend paid in current year for previous year. Any dividend paid in current year for previous year. That is final dividend paid. That also you add in what? Retained earning. Because that is that is declared from retained earning only. So you add back what? Final dividend paid, whatever is paid during the year, plus any interim dividend paid. So suppose any interim dividend paid, that also you add. No question of interim dividend has been given in ICAI study material, but given, so you need to add it. Interim dividend means current year dividend paid in current year. Correct. This you understood. Now you'll add also what? Any bonus share. Any bonus share declared. Declared by which company? Parent company or subsidiary company? All adjustment is for what? So this is final dividend paid by which company? Final dividend paid by which company? So if they have given final dividend paid by parent company, what you will do? If they have said final dividend paid by parent company, then what you will do? Nothing in this working note. Nothing in this working note. Correct? Nothing in this working note. Yes or no? In this working, because this is all working note for what? Subsidiary company. Correct? So only take the information of subsidiary company. I hope you are understanding the bonus here. Now bonus here, there are 2 points. If journal entry has been done, means if journal entry has been recorded by which company? So it means you need to nullify. So you will add back in the reserve from which it has been created. For example, they have done journal entry, journal reserve to equity share capital. So you will add back where? Journal reserve. Suppose they have done in retained earning debit to equity share capital. So you will add back where? Retained earning. Suppose they have given CRR, you know CRR, capital redemption reserve. So capital redemption reserve to equity share capital. You add back where? In CRR. So normally in exam they give where? Normally they give in general reserve, as per my experience. But be careful, it can be any other reserve also. तो जहाँ से डेबिट हुआ वहाँ पर add back करो. The account which has been debited, that account you add back. Understood what I am saying? Correct. But if no journal entry has been made, but what you will do? If no journal entry has been made, ignore nothing. Understood? Correct. So this become, after this adjustment, this become profit earned during the year. Profit earned during the year. Understood? This is the profit earned during the year. Have you understood this point? But batao, this is normal profit or total profit? This is normal profit. Normal profit means excluding abnormal item. Because you have added back what? Abnormal loss. This is normal profit earned during the year. Correct? I will explain everything, Ray. Please explain the treatment of unrealized. I will explain everything. I will started only. Have patience, otherwise you will also become patient. I will also become patient. Correct now. This chapter revision is difficult because why? Because I need to explain everything in how many hours? 4 to 5 hours. Very difficult to teach. Because what I am teaching, that you need to understand, and for understand, proper listening is required. If you will not listen, if you will think, "Arey ye nahi padhaya, wo nahi padhaya, ye nahi kiya," then you will not able to concentrate. So first concentrate. Whatever I am teaching, that you are understanding or not. Then at the end say, "Ki sir, you have not done this." So I will come back to that point. Chalega Asutosh? Okay, sir. Chalo. So profit earned during the year, this you have understood. Now this is profit earned during the year, but out of that, some can be pre-acquisition profit, some can be post-acquisition profit. Correct now. So can you see, if suppose this is the date of acquisition, year beginning only, then to entire become post. If the date of acquisition is year beginning only, then to entire become post. But if the date of acquisition is the mid of the year, then we need to do what? Some pre and post adjustment. So let us assume 6 months is pre and 6 months is post. It can be 3 months, 9 months, it can be 8 months, 4 months, it can be 4 months, 8 months, as per the information given about the date of acquisition. So you need to now divide this into what? Pre-acquisition profit and post-acquisition profit. Can I say as per the information given the question? as per the information given the question. Correct na? So can you say this can be 6 by 12, means you need to apply 6 by 12 or 4 by 12 or 3 by 12 as per the information given in the question. So balance will be, post will be, the difference means 12 minus 6 here, 12 minus 4 here, 12 minus 8, that become post acquisition period. That too I hope you know, I am not explaining that. So this you have understood, this you have understood, this you have understood, this you have understood. Now revaluation, if suppose there is some OCI component, so can this become OCI of subsidiary company earned during the year? So this become OCI. Till now this type of question has not been asked, but it is my 100% expectation that now they will insert this also. Till now not asked. So suppose they have given revaluation opening balance and revaluation surplus closing balance. The difference become revaluation gain which has arises during the year. Correct. Now if question is silent, ki when that revaluation happened, can I say revaluation can be done at any point of time as per IND AS 16. It can be done at the beginning of the year, it can be done at the end of the year, it can be done at the mid of the year or whatever. So that is not given the question, so we'll always assume ki revaluation has been done during post acquisition period. If question is silent, what will assume? Revaluation has been done during post acquisition period. But suppose they have given the question revaluation has been done during pre acquisition period, then that become pre acquisition profit. Otherwise it will be what? Post acquisition profit. Profit means OCI. Understood what I am saying? Correct. So then if question is silent, always take what? Entire amount as what? Entire amount as post, because question will be silent. I know question will be silent. They will not give anything any information about revaluation surplus. We will assume that revaluation gain has happened at the end of the year. Therefore, that it becomes entirely what? Post acquisition gain, post acquisition OCI component. Understood? If suppose they have given pre-acquisition period, then don't take this assumption. Then so they have given some information. Then do as per that information. Understood? So this is assumption. This is assumption. If question is silent. If question is not silent, do as per the information given in the question. Do as per the information given in the question. Understood? Correct? Any doubt up to this? Any doubt up to this? Now, if suppose abnormal loss, now abnormal loss is there. So abnormal loss, so can this become profit before abnormal loss? But we want profit after abnormal loss. So we need to 1 second deduct abnormal loss. So abnormal loss is deducted as per the date of occurrence. Abnormal loss was deducted as per the date of occurrence. So if it occurred during post acquisition period, deduct from post profit. If it is occurred during pre acquisition period, then deduct from. So can you see it can be minus abnormal loss here or minus abnormal loss here, depending upon what? Depending upon what? Depending upon date of occurrence. Date of occurrence. Understood this? Correct? Have you understood this point? But the analysis of profit. This is analysis of profit. All point done. All point taken into consideration. Have you understood bonus here? Bonus you understood? So if suppose they have given bonus here, journal entry has been done. So nullify it from the reserve and surplus from which it has been declared. From which it has been declared. This you understood? So we have done this. I have taken assumption that this has been declared from general reserve. It can be declared from retained earning also. It can be declared from any other reserve and surplus also. So add as per the information given in the question. So normally question is as per the all questions they normally give general reserve. Therefore I have written general reserve. Chalega? Okay sir? Yes sir. But if the journal entry is not done, if not done, so no journal entry, so no add back, will not add back. In the last exam they have given this point, no journal entry, no nothing. Means the last exam question, if you would have ignored that entire adjustment, then your answer would be correct. Ignore that. So if no journal entry has been done, ignore that simply. Chalega? Yes sir. Any doubt, bata? Any doubt you ask me first, then I'll go to some other. So working note number 1 you understood? Working note number 2 you understood? So chalo. Then I'll proceed. Pakka? Now let us come to working note number 3. So working note number 3 is statement of net asset. Now, normally I have seen that many teachers don't follow statement of net asset. Correct now. So if you have not followed statement of net asset, do as whatever you have done. But ultimate solution will be same. Ultimate solution will be same. So can you see we want INA on the date of acquisition? So for that we'll prepare one statement of net asset on the date of acquisition and on the date of consolidation, and the difference will be a post. In the post we write down retained earning, general reserve and revaluation surplus as per the this category. Means you have this much, to write down this much. If you have more than this, write down more than this during post acquisition period. During post acquisition period. Understood? Correct? Yes. Now first you write down equity share capital. Equity share capital. So write down opening balance and closing balance. Normally for equity share capital, opening balance and closing balance are same. For equity share capital, opening balance and closing balance will be same because no information will be given. So we'll assume nothing has been done during the year. Correct? So you need to write down opening balance and closing balance. Opening balance and closing balance. Understood? Have you understood this point? Correct? Yes. So normally no difference will come. Normally no difference will come. I'll come back to this point again after explanation of each point. So don't ask me any doubt in between, because you know this chapter, so some doubt will come, then you will what? You will be thinking much. So don't think much, think after completion of what? Entire explanation. Okay. Then we have retain earning. Retain earning. So can you say on the date of acquisition, this will be opening balance plus pre-acquisition profit. Plus pre-acquisition profit on the date of acquisition. Understood? And post acquisition profit we write down यहाँ पर. Understood? And this will be the date of consolidation means what? This plus this is equal to this. So this will be equal to, this will be equal to date of consolidation. Are you getting what I am saying? चलेगा. Then around general reserve, in this write down also opening balance plus what? Pre-acquisition profit. And this is was post. Write down post in what? General reserve column. This is the post. Are you getting what I am saying? And this will be equal to. चलेगा? Are you able to understand this format? Understood? Then we write down revaluation surplus if that is also given. This will be opening balance plus pre. So in our explanation, pre was nil na, but I am writing pre. Suppose pre, so write down pre here. Then write down what? Post in what? Post column, and this will be equal to. Have you understood this point? Correct. This will become what? Total. Find out total. Find out total. So this is actually carrying amount of INA of subsidiary company in their IFS. In their IFS. So this is equal to what? Carrying amount of INA. But we want fair value of INA. We want fair value of INA. So we'll do what? Plus minus fair value adjustment. fair value adjustment. Understood? For property, plant and equipment. Understood? So can you say there can be either increase in fair value, means it was fair value gain or fair value loss. It can be either fair value gain or fair value loss. So if it is fair value gain, you will do plus यहाँ पर. Can you say minus additional depreciation as per previous working note, and this will be the net amount. This will be net amount. Means this is as per previous working note. Write on this amount. Understood? This amount. This become fair value gain, and this become additional depreciation. Already we calculated. Chalega? Then if there is a fair value loss, so write down this as negative and this as positive. Have you understood this point? This point. Means any saving in depreciation will increase the post acquisition profit. So it has increased the post acquisition profit. Additional depreciation will decrease the post acquisition profit. Correct. Then B, if suppose inventory, so fair value gain, write down like this, and then any additional expense minus means increasing cost of sales if sold. If fair value loss, so this will be decreased, and this will be what? Decreasing cost of sales means increasing profit, and this will be the net amount. Understood? Similarly, if there is a trade receivable, fair value gain will be like this, and if it is received, then minus kar do, and if not received, that will become closing balance. Means you can do directly also if you are expert without preparing that working note, but I will suggest prepare every working note. Correct. Now fair value loss, so if there is a decrease in this, this becomes fair value loss, and if paid, then this, sorry, paid means received, then this amount, and not collected, so net amount. Understood? Then D, trade payable. Trade payable, so any fair value gain. Okay, fair value gain means decrease in liability. In this case, fair value gain means decrease in liability. For asset, fair value gain means increase in asset. So be careful. So fair value gain will come, and if settled means paid, so minus, if unsettled, then closing amount. Fair value loss means increase in liability, so this will be what? Minus, and this will be, if settled, then adjust it, and this closing balance is unsettled. Similarly, point number E, provision. Provision if any. So fair value gain तो will not come in this, fair value loss only will come, but चलो ठीक है, लिख लो, लिखने में क्या है. So it is what? Decrease in lab provision, settled and minus, and this will be net amount. And if there is a fair value loss means increase in provision, so that will be minus, because that will decrease INA. Correct? And this will be reversing, and this become what? Net amount. Have you understood this calculation? Means I am just giving a summary of all types of questions. Normally they give 2 or 3 information about fair value adjustment in exam, not more than that, but I am trying to cover all the points. Correct? Understood? Correct? This much? Correct. Then after this we'll do plus minus DTA adjustment, the deferred tax adjustment if any. This you'll do only when rate of tax is given. If not given, ignore in this chapter. So deferred tax adjustment. Deferred tax adjustment. Are you getting what I am saying? Deferred tax adjustment. Can I say, just try to understand. Normally, from exam point, this become temporary difference. This become what? Temporary difference. This become temporary difference on the date of acquisition. This become temporary difference. If this total is coming positive, means it is taxable temporary difference. Is coming negative, means it become deductible temporary difference. Normally it will be positive only, because normally they give fair value gain, but it can be fair value loss also. Be careful. Be careful. Are you getting what I am saying? So if it is positive, if the total is positive, means what? Taxable temporary difference. If this is what? Negative, means what? Deductible temporary difference. Understood this point? Are you able to understand? Correct. Why I am saying positive means taxable temporary difference? Because fair value is more than carrying amount. If fair value is more than carrying amount, it means taxable temporary difference. Understood this point? So can you say, if there is a taxable temporary difference, then create DTL, and DTL will be liability, to minus karo. Minus na, by applying rate of tax, means taxable temporary difference multiplied by rate of tax. Multiplied by rate of tax, that become DTL. And if deductible temporary difference multiplied by rate of tax, that become DTA. That become DTA. DTA को plus करना. Understood? Correct. And can I say, due to post acquisition adjustment, can I say taxable temporary difference or deductible temporary difference will reverse? Will reverse. So this will be the reversal of temporary difference. This will be reversal of, this total will be reversal of temporary difference. Are you getting what I am saying? So you need to just make a total of this also. So that will be reversal of taxable or reversal of deductible temporary difference, as the case may be. As the case may be. So can I say that adjustment will do? So this will be either plus or minus. So if this is DTL, so reversal of DTL will be deferred tax income. Reversal of DTL with deferred tax income, that will add to post acquisition profit. And reversal of DTA is what? Deferred tax expense, that will decrease the post acquisition profit. I think this point you have understood. This point have you understood? Bolo. This point have you understood? Correct. Means this will be not entire amount. Just find out the total of this, then multiply by rate of tax. Multiply by the rate of tax. Understood? And this will be the net DTL or net DTA, as the case may be, which will come in the balance sheet. Net DTA or net DTL, as the case may be. Correct? So this become what? Your amount. This become your total amount. Understood? This become statement of net asset. Statement of net asset. Understood? I will give this as A. Write on A, B, C, D. A, B, C, D. Anybody can do. Dance not, do. Dance. In exam will dance? Chalo. So anybody can do it. Very simple. Now, only one point. Bonus share adjustment. Bonus share adjustment. Now, can you see, if no journal entry is done during the year, then the opening balance and closing balance are same. Then opening balance and closing balance are same. Correct now? Then the no effect. Then ignore it. So whenever no journal entry has been done about bonus share, ignore that from the consolidation adjustment. Ignore the entire adjustment and don't think about that. Last exam, they have given no adjustment, no journal entry. So we should ignore it completely from any working note. Correct. But if journal entry has been done, So can you say, you only say whether bonus shares entry will affect net asset. Means when you have done the journal entry, journal reserve account debit or any reserve and surplus account debit to equity share capital, whether it will affect net asset of subsidiary company. No, it means can I say it should not affect Sona because no resource is coming in. If no resource is coming in, Sona means what? Statement of net asset. This is my habit है. This is my habit. Sona, Sona, Sona. ठीक है ना? This Sona is very important of life. Very important. So this chapter Sona is also important. So when I am saying what, just try to understand. When bonus share journal entry has been done, so whether it will affect INA, it will not affect INA. It will not affect INA. So can you see if you have nullified यहाँ पर you have done nullification. यहाँ पर nullify किया ना, so you should also nullify the impact in Sona also because it will not impact what? It will not impact what? Net asset. But can you see this closing balance will be after what? Bonus here. So I will say add what? Sorry, add not. Minus what? Bonus share capital. So from this closing balance minus what? Bonus share capital. And automatically this opening balance will be equal to this amount because always we write down this amount because there is no difference. There is no difference. Understood? Have you understood this point? So you will do minus bonus share capital when? If journal entry has been done by which company? By subsidiary company. Got this point? So automatically can I say bonus share effect has been ignored from subsidiary's financial statement? From subsidiary's financial statement. Understood? Have you understood? Got this point? Now they will say in exam bonus share journal entry has been done from pre-acquisition profit, post-acquisition profit. That point is totally not relevant. Ignore the effect. I will say nullify the effect. And nullify, so we have done that only. We have done nullify. यहाँ पर nullify किया. And then we have done nullify यहाँ पर भी. So ultimately the effect has been nullified. Got this point? Correct. I think. बताओ. Now in Sona I need out. Sona I need out. I will just inform you one point. Some of the teacher give this additional depreciation wala means this adjustment, this additional expense adjustment they will do with AOP only. Some teacher. So I don't know what you have done. You have done in that way. So they will do additional depreciation, yeah, post acquisition adjustment for additional depreciation, additional cost of sale. They will do with this only. I have done there because I will take this profit into consideration. This profit into consideration. Understood? So many teachers do not prepare Sona. Many teachers do not prepare Sona. So if you are not preparing Sona, then do accordingly whatever you are doing. Don't be confused. Don't be confused. Understood? How many of you do in this way? You are understanding or not? Understanding na? Huh? ठीक है ना? That's why I said this consolidation, revision, थोड़ा सा can be dangerous if you are not, if you have done in previous classes in some other way. ठीक है ना? Correct? But I hope you are understanding. If you know the concept, you are able to understand. ठीक है? Got it. Sona done. Now we'll do working note number 4. Calculation of what? Goodwill or gain on bargain purchase. Gain on bargain purchase as per IND AS 103 on the date of acquisition. Correct. So for this you will take fair value of consideration paid. Here this is nothing but cost price of investment given in the balance sheet of parent company. Understood? Correct. Given in the balance sheet of parent company. Sir, is the symbol correct in trade payable in Sona? Symbol correct. Trade payable. What is wrong in this? Trade payable means what? Symbol means what? What do you mean by symbol? Positive or negative? This is what? Fair value gain means decrease in liability is fair value gain. Correct ना? And this if settle to minus करना है. Correct only. It is all correct. अच्छा यहाँ पर minus कर दो ठीक है. Okay now. This will be minus. I have understood. This is minus. Okay sir. ये भी minus होगा. ये भी minus होगा. Now happy? Now happy? चलो. Okay sir. This will be minus. Okay sir. Chalo. But that last column is not relevant. I am explaining about what first column and second column. Now okay? Okay sir. चलो. Understood what he was saying कि sir last column में आपने positive कर दिया है. One will be positive, one will be negative. हाँ हाँ. Understood point ना? Understood point. ठीक. Okay sir. Now fair value of consideration paid will be equal to what? Cost price of investment. Sometimes they don't give, means they will say that journal entry of investment has not been done. Journal entry of purchase of equity shares by parent company has not been done. Then you have to calculate PC by applying the concept of what? By applying the concept of IND AS 103. IND AS 103. So PC calculation will do where? When I will do business combination chapter. So sometimes they will say journal entry of investment has not been done in the books of parent company. Then so you can't take that cost price of investment from parent company separate financial statement. Then to calculate PC as per the concept of IND AS 103. So how to calculate PC will do in business combination chapter. Chalega? Understood? Okay sir. Then in this you will add fair value of any previously held equity interest, fair value. So suppose they right now acquired 40% on the date of acquisition and previously they were holding 20%. So this fair value will be 20% of equity shares of which company? Subsidiary company multiplied by the fair value of equity shares of which company? Subsidiary company. That fair value will be given on the date of acquisition. On the date of acquisition, that you do. Correct. Then in this you will add value of NCI, value of NCI. Correct. Now value of NCI can be by using two methods. One is known as what? Fair value method. One is what? Proportionate share in INA method. Proportionate share in INA method. Understood? Now, if fair value information is given in the question, then apply what? Fair value method. Otherwise, apply what? Pasina method. Means if question is silent, what will follow? If question is silent, what will follow? Proportionate share in INA method. If question is silent, will follow Pasina method. Now, in fair value method, it means suppose this is 40%. It is 40 plus 20, 40% only, na? So 40% become NCI. And is 40 plus 20 plus 40, 100 ho gaya. So that you can find out how much percentage. Correct now. So fair value method, you will take 40% of equity shares of which company? Subsidiary company multiply by what? Fair value of equity shares given in the question. So fair value of equity shares of which company? Subsidiary company. Correct. And if you have done Pasina method, it will be fair value of INA on which date? On the date of acquisition. So fair value of INA on the date of acquisition means whatever we have calculated A. A is what? This A. This A. A understood? Not this last one. A. Fair value of INA on the date of acquisition. A. Multiplied by what will do? Proportionate share, that is 40% as per my explanation. So this become what? Value of NCI. Value of NCI can be calculated by using fair value method or Pasina method. Understood this point? Correct. Any doubt? Any doubt? So now we'll calculate total of this. This become total value of business of which company? Subsidiary company. This become total value of business. We don't write value of business in exam, therefore I am not writing. Okay, now don't write value of business, but this is total value of business of subsidiary company. From this we deduct what? Less fair value of INA. On which date? On the date of acquisition. Means we will deduct A na. A understood? A calculated in SONA. A calculated in SONA. Understood? So this become what? Fair value of INA on the date of acquisition. Can you see this goodwill? This goodwill will be calculated. This is goodwill on the date of acquisition. This is a goodwill on the date of acquisition. Can you say if fair value method of NCI, then this will be which goodwill? Then this will be full goodwill. And if we have used Pasina method, this will be which goodwill? Partial goodwill. Understood? Now after this, sometime they will give impairment loss of goodwill. So we'll deduct what? Less impairment loss of goodwill. If given the question, thank you very much. If not given, calculate as per which chapter? Calculated as per which chapter? IND AS 36. IND AS 36. So one of the question is given in ICAI statement recently, means in RTP MTP. In that they have asked you the calculation of what? Goodwill in this chapter. So you need to calculate also. Means business combination chapter, this chapter more or less same. Understood? So if they ask calculation, we need to calculate it. Calculation also that we can do. They will give you CGU. Then same thing, that concept of whatever we have done. Understood? But normally they will give impairment loss only. So this become what? Carrying amount of goodwill on the date of consolidation. Chalega. Understood? Working note number 4 you have understood. Now we'll do working note number 5. Working note number 5 is for other equity and what? NCI. Other equity and NCI. Correct. Now in this we write on retained earning, general reserve, or any other reserve of parent, any other reserve given in the parent financial statement, and then we write on at the end NCI. So this is other equity and this is NCI. Understood? Correct. We will start with what? Balance. So this retained earning, general reserve and other reserve, this balance will take from where? This balance will take from parent company, separate financial statement, and NCI balance will take from where? From working note number, which working note? This na. This value of NCI will take working note number 4. Take from working note number 4. Chalega. Understood? Have you understood this? Now in this we'll do plus minus any share in profit of which company? Subsidiary company. So this will be as per SONA. We'll take retained earning, general reserve. Retained earning means what? It is B, and general reserve means what? Amount C. Understood? Retained earning means what is the amount? B amount, and general reserve amount number C. Are you getting what I am saying? Correct. It can be either profit or loss depending upon the SONA. It can be profit or loss. It is profit or loss. Normally it is profit, therefore I am writing profit. Chalega? Then it will be allocated to parent company and NCI as per the respective ratio. So in my explanation, it is 60% and 40%. So you will allocate these retained earning in retained earning and NCI. Correct. And general reserve will be added to what? General reserve and NCI. Got this point? Then we'll do plus minus share in what? OCI also. OCI may have given revaluation surplus. OCI may have given revaluation surplus. Are you getting what I am saying? So share in OCI also will come. Correct. So revaluation surplus. So we have some post acquisition profit, means I am talking about point number D. Point number D. So this will be allocated to revaluation surplus and what? NCI. Understood this point? Have you understood this point? But up to this any doubt? Then we'll do minus what? Minus dividend received. Dividend received. Both final dividend plus interim dividend. Final dividend and interim dividend. Correct? Final dividend and interim dividend. So you can see we have added what? यहाँ पे add किया था. We have added what? Final dividend and interim dividend. Can you see it will be received by parent company and NCI? Received by parent company and NCI. So 60%, 40% as per our example. So can you say parent company minus from retained earning? So minus from retained earning, and this minus from what? NCI share. NCI share. Dividend received. Normally this is danger. Student forget about this. This is danger. Normally student will forget. Understood. Then we'll do minus impairment loss of goodwill. Impairment loss of goodwill. Impairment loss of goodwill. Now impairment loss of goodwill, if it is full goodwill, अगर ये full goodwill है, then it will be attributable to both parent company and NCI. So minus from what? Retained earning as well as what? NCI. But if it is partial goodwill, I hope you are understanding, huh? Partial goodwill, then it will be attributable only to what? Entire will be allocated to what? And NCI will give what? Anda. Anda na? Anda. Understood? This you have understood? Correct? Then suppose they have given any impairment loss of any other asset, means PP etc. Other asset means PP etc. Correct? Then there is no concept of partial PP. Huh? Then it will be allocated both to what? Parent and NCI. Till now this type of point they have not asked in exam, but they may give that also. That may be also given. That may be also given. Understood? This also correct. Then we'll do what? Plus. Then we'll do minus unrealized profit. Minus unrealized profit. Unrealized profit. Correct. Unrealized profit, it can be of two types: downstream transaction or what? Upstream transaction. So unrealized profit on unsold stock. Unsold stock. So downstream transaction, it can be upstream transaction. Downstream transaction means what? Downstream transaction means what? Batao. It is a profit of parent company included in the stock of subsidiary company. So it means it will be profit of parent company attributable only to what? Parent company. So this will be only allocated to what? Minus from what? Only parent company. Are you getting what I am saying? But the upstream, it is a profit of which company? Subsidiary company included in the stock of what? Parent company. This will be attributable to what? Both party. Both party, you understood? This minus this. Understood now? Have you understood this much? Bolo. Any doubt? Correct. Understood? Correct. Now be careful. Sometimes they give some error. Till now they not given error in the books of what? In the books of parent company. In the books of parent company, that will be also adjusted. That will be also adjusted. Only retained earning. Plus, it can be plus minus. It can be plus or minus as per the information given in the question? Are you getting? It can be plus minus. Have you understood this point? Till now not given, but given, so you need to adjust. Given, so you need to adjust. Now, if they are given some error in the books of subsidiary company, then where it will come? यहाँ पर. Then it will come in analysis of profit. That I have not given because normally they don't ask. I am writing that also. In analysis of profit, after abnormal lesson, I am writing plus minus any rectification of error. If given error in subsidiary company books, if given, तो यहाँ पर करो plus minus. Are you able to understand? Normally they don't give this type of point, but to confuse you, and as per the last question, whatever I have seen, they may now give this type of question also. Got this point? Have you understood this point? Correct. I think all point done. Correct. Now, any dividend paid or declared and paid by parent company, but what will do? Any dividend declared and paid by parent company? Huh? Any dividend declared and paid by parent company? Declared and paid by parent company. Huh? Bolo? Correct. Can I say dividend declared and paid by parent company? Already journal entry has been done. Therefore, no effect. Until unless there is an error. So already I have written error should be recorded. If paid but not recorded, it become error now. If paid but not recorded, then it become error. But paid and nothing is given, so recorded only. If they are saying dividend paid by parent company, so recorded only now. How can you assume it is not recorded? So no adjustment for that. Means we are doing only adjustment for which company? Subsidiary company. We are doing only adjustment for subsidiary company. Suppose they have given impairment loss of parent company PP, that is already minus कर दिया ना. तो कुछ करना क्या? Already that has been deducted. I hope you are understanding. Correct. So I have said error. If it is not recorded, then it become error. Then it become error. So now this become what? I think all adjustment I have done. So this become what? Final answer. And now from this you will prepare what? Consolidated balance sheet. Consolidated balance sheet. Understood? Any doubt? Only this much. Off on. Okay. I think all the points cover. Now I will come to what? The chapter. Whatever not done, then I will discuss now. Have you understood this much? Any doubt you can ask me. Now any doubt, if some point I have missed, I will inform you. I think all the points I have done. Batao. Live class student. Any point which I have missed and you want an explanation for that? Can I proceed? Chalo, let us come to the concept. Now this basic thing to you know. Concept number 1 already I discussed, calculation of goodwill or gain or bargain purchase. I have discussed, no explanation required. Then concept number 2, preparation of what? Sona also I have discussed. Concept number 3, time adjustment analysis of profit also I have discussed. Abnormal item also I discussed. Dividend declared and paid by subsidiary company also I discussed. Correct now. Fair value adjustment also I have discussed. Correct now. Cancellation of intercompany debt. Cancellation of intercompany debt means cancellation of any intercompany balance Okay, it will not affect any working note. Directly cancellation you will do where? In CVS. So cancellation, it will not affect working note number 1 to working note number 5. It will not affect that because that is cancellation of assets and liability. So any intercompany balance will be cancelled. So there can be two type of intercompany balance given. One is in respect of mutual debt, means payable and receivable. So what journal entry will do? Payable account debit to receivable. But sometime what happen? They will give payable 10,000 and receivable 12,000. That difference will be what? Difference will be check in transit. Even though question is silent, and that check in transit will be added to the cash and cash equivalent. Now for cancellation of mutual acceptance means bills transaction. So journal entries were bills payable account debit to bills receivable. Now suppose they have given in the books of parent company, in the books of subsidiary company, they have given BR they have given 10,000 and they have given BP how much? 12,000 suppose. So it means out of the total bill 12,000, 2,000 has been discounted by parent company. So out of 12,000, 2,000 has been discounted by parent company. But how much will cancel? 10,000 to 12,000? One second. BR is coming how much? 10,000. BP is coming how much? 12,000. It means who is the drawer? You know bills of exchange chapter na? Who is drawer? Who is drawer? Parent company, subsidiary company. जिसके बुक्स में BR आ रहा है वो ड्रॉयर हुआ ना. You are thinking so much, foundation forgotten. अच्छा, parent company is a drawer, so who will discount the bill? Who will discount? You know the bills of exchange chapter na? Who will discount the bill? You know discounting of bill, endorsement of bill. So who will discount it? With whom? Bank. So the total bill was how much? How much discounted? So BR become how much? BP remains same. So how much you will cancel? 10,000 or 12,000? 10,000. So you will cancel to the extent of bill which is not discounted. You will cancel to the extent of bill which is not discounted, and the undiscounted bill will become actual liability in what? CVS. So this BP, whatever remain undiscounted 2,000, that will become actual liability in consolidated financial statement. Understood? Correct? Chalo. This also done. Then this we have understood, cancellation of unrealized profit on unsold stock or asset due to intercompany transaction. This also you have understood. Chalega? Okay. Then proposed dividend. Come to proposed dividend. Now suppose they have given the question that both the company had declared proposed dividend at a rate of what? 10%. So can you say as per IND AS 10, we do not recognize any proposed dividend. There was no effect in consolidated financial statement. Ignore it completely. Ignore it completely. Now suppose they have given proposed dividend. They will not ask this type of question, but we don't know. As per last question, they may ask anything. Because now they are asking question from what? When we used to do AS based what? Question in our CA final. So they are taking question from there. So in our days they used to ask this type of question, give proposed dividend wrongly adjusted in the books of what? Subsidiary company. Means they have done journal entry for proposed dividend in their individual financial statement, to nullify it. Then we'll add back what? Entire proposed dividend in AOP only, and then gives no second effect will be given. No second effect will be given. So if proposed dividend journal entry has been done, so nullify it, reverse the journal entry, but normally they don't ask that type of question at CA final IND AS based question. So if nothing has been done, ignore it completely from consolidated financial statement. Chalega. Then concept number 10, dividend received by parent company from subsidiary company. Now as per IND AS 27, any dividend received by parent company from subsidiary company will be credited to PL. So as per IND AS 27, dividend received will be credited to PL. So normally in exam question they write the dividend received by parent company has been credited to. Are you getting what I am saying? As per IND AS 27, in separate financial statement, dividend received by parent company will be transferred to what? PL. Now in exam question they will write down dividend received by parent company has been transferred to PL, and therefore we have done this. यहाँ पे किया ना, minus what? Minus dividend received, because it has been credited to what? PL. So we are cancelling that dividend. we are cancelling that dividend. But suppose till now that type of question is not asked. Suppose देखो special point, suppose if they have given if dividend, because I know now this type of question can be asked because they are taking question from what old scheme when we used to do CA final based on what AS, correct? If dividend received by parent company has been credited to investment account. Suppose this point has been given, it is an error or it is not an error. It become error, so we need to rectify it. So what journal entry, what rectification entry will do? They have given dividend received by parent company has been credited to investment account, means they have done what? Bank account debit to investment, but it should be bank account debit to PL now. So what rectification entry will do? You will increase what? You will increase investment account debit to what? Retain earning, means increase investment and increase retain earning. So this become rectification. So this you need to do before what? Before giving consolidation adjustment now. So first you do this, then minus dividend received. Means all your effect remains same. ये पूरा ऐसे रहा. यहाँ पे पहले क्या कर दो? Plus rectification entry ना. So first you will add what? Dividend received, and then minus what? Automatic minus dividend received will come. अरे बोलना नहीं. Not able to understand. Have you understood? Means when I am saying correctly recorded, so this balance already have what? If I am saying correctly transferred to PL account, so this balance is after dividend received na. So after dividend received, so minus कर दिया. But if there is an error and that has not been transferred to PL, so first you add what? And then minus what? पहले add कर, then minus कर. Understood? So all other point remain same. All other point remain same. Only pass one rectification journal entry. That's why I said error plus minus what? Error. Till now this type of question they are not asked, but they will ask Bakka. As per last question I have understood, now they don't have any question. They will create new question. As per what? They will go to what? Previous examination. They will take question from there and they will change it. Understood this point? And one more adjustment what? You have done. And in investment, when you are doing this, what? I have said cost price of investment. Take cost price of investment from balance sheet. So that will be also increased now. So whatever investment is coming in the balance sheet, that is not correct. That is not correct. So first think about that error. First think about error, then think about all other adjustment. First rectify, eliminate that error. Understood? Correct this point. So if you have understood this journal entry, you can do now. You can do or not. So this rectification you are doing in separate financial statement. In separate financial statement. Understood? Have you understood this point? Correct. So normally dividend received as per now interest on deferred consideration. देखो that point will automatically understood when you will do business combination chapter. Correct now. Okay, I will come to that point also. One question has been given of that nature also. Deferred consideration वाला point में भी आ जाते. But PC I am not teaching you in this chapter. PC I will teach where? In business combination chapter. तो बहुत अगर सब चीज ला देंगे ना तो you will be totally confused. So I said PC कहाँ चल जाओ? When PC is not given in this chapter, then calculate PC as per business combination chapter. Correct ना? तो I am assuming that you know how to calculate PC in this chapter. If you don't know, then we'll do where in IND AS 102 when we'll do that separate chapter, business combination chapter. चलेगा? Yes sir. Okay sir. क्या बता रहा था मैं? बराबर से हो गया ना? हाँ तो चलो. As per IND AS 27, dividend received should be transferred to PL. So if correctly recorded, then no rectification required. Normally they give dividend received has been transferred to PL. In all question of ICAI study matter they have given that only. But suppose they have given dividend received by parent company has been credited to investment account, because in AS 13 if you remember when you were in AS they used to say pre-acquisition dividend transfer to what? Credited to investment account. So this type of question can be asked. chalega. Then think about this, chalega. Done. Understood. To this point also, dividend received by parent company, you have understood. Okay, sir. The next point. Concept number 11 already I have explained. Impairment of investment in subsidiary or joint venture. Impairment of investment. Now, can you say in separate financial statement, investment in subsidiary company will be a single asset. In separate financial statement, investment in subsidiary will be single asset, but it will be impaired as per which IND AS? It will be impaired as per which IND AS? IND AS 36. Now suppose the cost price was 1 lakh and already you have done impairment as per what? IND AS 36, 90,000. Correct? So, but in balance sheet 90,000 will come or 1 lakh will come? 90,000. Now it is given that already impairment has been done by 10,000. But what is the cost price of investment? PC is 1 lakh or 90,000? PC is 1 lakh or 90,000? 1 lakh. It means if this information has been given, till now not asked in ICAI study matter question. So if suppose that they have given that impairment of investment has been done as per IND AS 36 by rupees 10,000 in additional information, to reverse that journal entry. So what journal entry will do? Batao. Investment account debit. Investment will increase now. To what? Retained earning. You will pass this journal entry. These all are special point. Till now not asked in exam. Investment account debit retained earning before preparing what? Consolidation effect. Before giving consolidation effect. So nullify this because cost price is what? 1 lakh. And impairment in CFS is not required in CFS, so that subsidiary company will become what? A CGU, a cash generating unit. Understood? This point have you understood? But I don't think so they will ask this question. If they are asking this type of point, means they want to kill you. If they are asking this point, means they want to kill you. Means so the game is over. If they are asking this type, but simple only. If your concept is strong, you can do it. Chalega? Yes, sir. Done. Concept number 10 also done. NCI already I have explained. NCI already I have explained. Pura NCI explanation I have done. Correct? Yes, sir. NCI also done. Okay. Now, one special point is NCI, that NCI cannot have negative balance. NCI cannot have negative balance. Means if suppose the share of loss is more than carrying amount, then also it will be attributable to whom? NCI. Sorry, I said NCI can or cannot bol diya. Sorry, NCI can have negative balance. NCI can have negative balance. So NCI can have negative balance. It means the share of loss is more than the carrying amount. Then also it will be attributable to whom? NCI only. So NCI can have negative balance. Okay. So I think this type of question, if given also, you will do correct only. This IND AS 36, means NCI impact on goodwill already I have explained under IND AS 36 about partial goodwill, full goodwill, partial goodwill. We need to add back, grossing up karna. So this already I have explained where under IND AS 36. This also done. Correct. Chalo, up to this means this is one point done. Up to this. So it means this all point can be asked as one question. So we'll take one question for practice. We'll take one question for practice. Chalega. So come to question 27. This similar question have been asked 3 times in exam. Similar question. Okay. Ram Limited acquired 60% of ordinary shares of 100 each of Krishna Limited on 1st October 2001. This becomes the date of acquisition. On March 31, the summarized balance sheet of the two companies is given. Okay, sir, given. The retained earning of Krishna Limited showed a credit balance of 60,000 on 1st April, means opening balance, out of which dividend of 10% was paid on 1st November. So it was paid before acquisition, after acquisition? After acquisition. So if it is paid after acquisition, it means received by parent company. If it is paid before acquisition, means not received by parent company. Normally they give after acquisition only. If question is silent, assume what? After acquisition only. Ram Limited credited the dividend received to what? Means correct or wrong? Wrong. Correct. Correct only. Fair value of plant and machinery on 1st October means date of acquisition is 4 lakh. The rate of depreciation of plant and machinery is 10%, but nothing given. SLM RBM. What will assume? SLM RBM. Now assume SLM and then ask marks. They will come after 6 months, then we'll give marks. ठीक है ना? Understood? So I have explained entire thing from examination perspective. So assume RBM only. Next time, following are the changes. Oh, changes in the fair value as per respective index. So but they have given fair value gain or loss, or they have given fair value. They have given fair value gain or loss. Be careful. They have given trade payable, land and building inventory. Batao, this amount is increase or decrease? So if amount is given in positive means increase. If given on negative means decrease. So this is increase in land and building, increase in inventory, increase in trade payable. Note, it may be assumed that inventory is unsold. If nothing is given, we'll assume that only. Correct? And trade payables are not yet settled. If nothing is given, we'll assume that only. Correct? Also assume other reserve is same as what? Closing balance. If nothing is given, we'll assume that only. So these are the general assumptions. Suppose this point has not been given, then also assume this only. If you are assuming some other point, gola. Previous CBS. Can we do? Now, kitna maja aayega? We are doing question number whatever. Working note number 1. But the first kya? First working note is what? Fair value adjustment. Batao, they have given plant and machinery. I am writing for your understanding all land and building, trade, inventory and trade payable. Batao, what is the fair value of plant and machinery given on the date of acquisition? Means on 1st October. Batao, 4 lakh. What is the book value given? Carrying amount on 1st 10. Where they are not given? They are not given on the date of acquisition now. It means we need to recalculate it. Whether they have given opening balance of plant and machinery. Where they have given opening balance of plant and machinery. Not given. Whether they have given closing balance of plant and machinery. Yes. How much given closing balance? So they have given 2 lakh. So this is the closing balance. So can you find out opening balance? Okay, this is the 90% of opening balance because 10% is what? Rate of depreciation. This is 90%. So you will do what? Into 100 divided by 90. How much? So 3 lakh become what? Opening balance. From this you will calculate how many month depreciation to find out on the date of acquisition. 6 month depreciation. 6 month depreciation at 10%. It is 15,000. So this become what? 2 lakh. 85,000, 2 lakh, 85,000. So what is the fair value gain? Fair value gain is 1 lakh 15,000. Can you say for land and building the fair value gain is given how much? 2 lakh. For inventory how much given? 30,000. And trade payable how much given? 20,000. It is fair value gain or loss? Loss because it is increase. So negative. Negative now. Increase in trade payable is fair value loss. So that is loss. So loss ko negative mein likho na. This is dangerous. Means I have seen student is small mistake. I am not saying you will do mistake. Don't take me in other way. But this is totally danger. Totally danger. Can you say this you don't require, 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 because they have given what? Directly the changes in the fair value. Correct. Now can you say we'll do additional depreciation means additional expense during which period? Post acquisition period. So you will find out additional depreciation for plant and machinery. You will find out additional depreciation for plant and machinery. So RBM. So you will take fair value. What is the fair value? Fair value is what? 4 lakh minus opening balance how much? 3 lakh into what? 10% into what? 6 by 12. How much it is coming? 5,000. So 5,000 become additional depreciation. Understood? This is also super danger. पता नहीं, I don't know why they take some other amount. They will take 2,85,000. पता नहीं क्या क्या लेंगे. They will do directly 1,15,000. So this is also dangerous in exam. Even though you have understood right now, you will be also doing mistake if you are not concentrating. Small mistake. This is the mistake. Can you say Sona mistake? Sona mistake. Goodwill mistake. Goodwill mistake. Understood what I am saying? Correct now. Got this point? Okay. So be careful. So this become 1 lakh, 10,000, 1 lakh, 10,000, 1 lakh, 10,000. Understood? Correct. Can you say now land and building, they have not given rate of depreciation. So we'll assume this entire gain is related to land component. We'll assume this entire gain is related to land component. Suppose they have given the question the entire gain is related to building component, then we need to find additional depreciation for building if the rate of depreciation is given. So this will ignore. No. Can you see this remain unsold? No. This remain unpaid? No. So ultimately this will become what? 2 lakh 30,000 and negative 20,000. This become low. चलेगा. Working note number 1 done. Now come to working note number 2. Analysis of profit. So we will have retained earning and general reserve. But what is the closing balance given first? As per the balance sheet. Retained earning 1,64,000. Opening balance. Closing balance of general reserve. Other reserve. Other reserve. Okay. Other reserve how much? You are giving closing balance. Now opening balance of retained earning 60. Opening balance of general reserve nothing given. What you will assume? Same. Understood? Correct. But what is the profit calculated after taking the difference? This become 1 lakh 4,000. This is nil. Okay. Now any abnormal item? Any abnormal loss given? Any dividend paid given? So plus karo what? Plus final dividend paid at a rate of 10%. 10% na? 10% of what? 10% of capital. Capital of which company? Subsidiary company. What is the capital given? 4 lakh. So you will take what? 40,000. Done. So final dividend also done. Interim dividend given? Nothing given. Any bonus here given? No given. Any error given? No error. So only one adjustment. So this become how much? 1,44,000. Correct. Now you will divide, allocate in what? Pre and post. Pre and post. It is 6 by 12 and 6 by 12. 6 month pre and 6 month post. So this is 72,000 and 72,000. Done. And there is no abnormal item. So once again nothing to deduct from this. Chalega. Understood. AOP also done. Then working note number 3 is what? Statement of net asset. We write down date of acquisition, date of consolidation and post. In post you can write down what? Retained earning and general reserve. Other reserve. Okay. But the equity share capital how much? 4 lakh closing balance. If nothing is given, opening balance will also become what? 4 lakh. Then can you give me retained earning, opening balance plus pre plus 70,000. Total 132. 132 na? And post is how much? Total become 2 lakh 4,000. This is equal to. This is equal to. Then other reserve opening how much? Pre how much? Nil. So this become 2 lakh. Post how much? 0. That is what? 2 lakh. Total how much? 7 lakh 32,000. 72,000. Nil. Total 8 lakh 4,000. Then you do plus minus what? Fair value adjustment. So they have given for PP. PP how much fair value gain? As per previous working note. What is the additional depreciation? This is what 1 lakh 10,000. Then we have land and building. What is the fair value gain? Any additional depreciation? This will be 2 lakh. Then inventory. What is the fair value gain? Any additional cost? So it will remain 30,000. Trade payable. What is the fair value loss? Loss na. Any adjustment? So this remain 20,000. Can you give me the total? Now rate of tax is not given. Ignore. Do you want me to take rate of tax also? Can I include deferred tax? You want me to take deferred tax? Suppose rate of tax is given. मान लो rate of tax is given. मान लो. So I am changing the question. I am changing the question because higher probability. Now they have given one question based on that. So that question can be asked in exam. If suppose rate of tax given, it means they want you to calculate what? Deferred tax. So बताओ, this is what taxable or temporary? Taxable or deductible? Because it is positive. Positive means what? Taxable means fair value is more than carrying amount, and we have assumed that carrying amount and tax base are same. Nothing is given. So it is 1,15,000 plus. So बताओ minus DTL how much? This is how much? 3 lakh na? 3 lakh into, let us assume 30%. Let us assume 30%. 97,500 plus ki minus? Minus. And how much reverse? So 5,000 into 30%. How much? How much? 1,500 na? 1,500. What is the amount left? 96,000 plus minus minus. Now can you give me the total? So this point we have added, huh? Don't be confused. 10 lakh 28. Then 9 lakh 59,500. This one 68,500. Chalo, correct. Okay, sir. Correct. Done. So working note number 3 also done. Now we'll come to working note number 4. Goodwill or gain on bargain purchase. But what is the PC? PC means fair value of consideration paid is equal to cost price of investment. How much the cost price of investment given in the balance sheet? 8 lakh. The cost price of investment is 8 lakh. This for how much percentage? 60%. There is no fair value of previously held equity interest. So directly will come to NCI. NCI batao whether they have given fair value method. So we'll always use, whenever question silent, use what? Pasina method. Use Pasina method. Understood? So we'll take 40%. 40% of what? 9,59,500. Understood? So 9,59,500 into 40%. How much? 3,83,800. What is the total of these? 11,83,800. From this, what will minus? Fair value of INA on the date of acquisition, that is 9,59,500. What is partial goodwill? What is partial goodwill? Batao. 224,300. Nothing has been given about impairment loss. Ignore it. If given, to minus impairment loss also. Chalega. 4 are done. Now working note number 5 will do. That is other equity and NCI and NCI. So they have given what? Retained earning, other reserve and NCI. So can you give me first balance of retained earning and other reserve from the balance sheet of parent company? 1,14,400. Other reserve 6 lakh. NCI 3,80,000. Means from this it will come. Correct. But we'll do plus share in profit, share in profit as per Sona. So it is retained earning 72,000. So allocate karo what? 72,000 into 60%. Sorry, not 72. My mistake. 68,500. 68,500 into 60%. How much? 41,100. Then NCI 27,400. Done. Correct. Then minus dividend received. Dividend received. So how much dividend paid? Dividend paid is how much? 40,000. So minus 6. Allocated to both party. How much? 24,000 minus and 16,000 minus. Done. All point done. Correct. There is no impairment, loss of goodwill. There is no unrealized profit in this question. If given, तो we'll do that also. If given, तो we'll do that also. कितना simple है. Now, normally this become complicated. Why? This become complicated. Why? Because you do one mistake initially. Either by reading the wrong question, means question you have not read properly, or while reading and while doing the solution you have taken wrong amount, or lack of concentration, पता नहीं क्या हो गया. This will affect in exam. This chapter is super easy, means consolidation तो I think सबसे आसान chapter है. As per ICAI question given, whatever question given, if you have done that much, there are, I think counting में 7 to 8 questions are there. Only 7 to 8 questions are there. Now what question they will ask in exam, that we also don't know. So for that we should not think right now. In that exam hall you need to do whatever you have understood. Now what question they will ask, can I say in your exam? Which question they will create, that I don't know na. So any new question if they are asking, that is new for everyone. That is new for everyone. So I will say do whatever you have understood. Do whatever you have understood. New point game, apply whatever you have understood. Don't waste your time, because if you are wasting your time, your other question will be left. Or if you don't want to do, leave it immediately. Don't take much time on that. Now what happened last attempt, that same question consolidation, everyone take more than 1 hour. If you will take more than 1 hour in one question, so balance 80 marks question, how can you do in 2 hours? That you need to understand. So I will say that question, if you are attempting after 30 minutes, if you are feeling that no nahi ho raha, छोड़ दो. So करना भाई. You have some other question to score na. There you score. Correct. So in exam don't be emotional. See why balance is not tallied. Sometimes entire questions you have done, balance it is not tallied. We are wasting our 20 minutes in that to find out that mistake. And that will be not easy to find out. It will not be easy to find out, because one mistake what you have done, that you also don't know. तो छोड़ देना, लास्ट में टाइम बचता तो वापस come back. ठीक है ना. So don't become emotional. I think after this balance sheet you can prepare. Balance sheet is not only in the format you need to prepare. Correct. Now in the format normally notes to account is required. So I will say if you have time, do notes to account. If you do not have time, I will say leave space, come back at the end. Because if you are drawing notes to account, so they will maximum, if you are not drawing, so maximum they will deduct 2 marks. But in that time, if we can do one question of 10 marks, that is more important. So for notes to account, if you think that yes, you have time, do it. Otherwise, leave it and come back again at the end. But 2 marks is good or 10 marks is good. So in exam, it is smart what to do, what not to do. That you need to calculate. I can't say right now do or not do. So of course notes to account is required as per ICAI solution. As per ICAI solution. चलेगा? I think बताओ. In this question any doubt? बोलो. So if you have understood this much, now we can proceed to other concept of this chapter. Now, coming to now other concept of this chapter. The next concept is what? Acquisition of interest in subsidiaries at different dates, means multiple acquisition, which is also known as step acquisition. So already I have discussed this also. Whenever multiple acquisition, we calculate goodwill or gain on bargain purchase only on the date of acquisition, means when the control is obtained. And one more working note I forgot. One more point is there. Chalo, one point I will add more after that working note now. This was working note of 5 now. One more point will come. Working note number 6, if you want to write down. Working note number 6. This is only when they have given step acquisition. So now I am adding one more point about step acquisition. Can I say fair value of previously held equity interest you have already calculated? So you need to find out remeasurement, gain or loss. Remeasurement, gain or loss. So that will be equal to fair value of previously held equity interest. Means this point will come only when they are about step acquisition. Otherwise this point will not come. So fair value of previously held equity interest. Now deduct from this carrying amount of what? Previously held equity interest in separate financial statement. Correct. Whatever given. This will be remeasurement. This will be remeasurement, gain or loss, which will be transferred to what? PL or OCI. Normally if question is silent, transferred to PL. But suppose this investment we have measured at FBTOCI, then this will be transferred to what? OCI. Otherwise PL. So I will say PL or OCI. But if question is silent, then PL means retained earning, working note. So retained earning working note will be also affected. So this is due to what? Step acquisition. One more working note will be added. So last exam question, they have asked for step acquisition only. Initially they have acquired 40%, then they acquired 30%. ऐसा कुछ question था. So that is nothing but what? Step acquisition. Understood this point? So this working note will be added only when there is a step acquisition. चलेगा. So that is only given in this. कि goodwill and gain on bargain purchase will be calculated on date of acquisition by using this formula. And in a business combination which is achieved in stages, the parents remeasure his previously had equity interest in the investee at his fair value on the date of acquisition and recognize the resulting gain or loss, if any, in profit or loss OCI as appropriate. Chalega, done. Then sometime what happens? We acquire interest in subsidiary without paying any consideration. Means the consideration is not paid, then also control is obtained. Correct? So in that case, same formula will be there, but only fair value of consideration paid will be 0. Fair value of consideration paid will be 0, means it will come fair value of previously had equity interest. Then what? NCI as per fair value method or Pasina method, and then minus fair value INA, and this will be goodwill or gain on bargain purchase. Okay. This type of question they will not ask. In consolidation chapter. Concept number 16. This is may be important for 4 marks or 5 marks question. Changes in the proportion of NCI. Changes in the proportion of NCI. Correct. Means once the control is obtained, suppose you obtain control at this point of time by acquiring 60%. Then after that, parent can either again acquire 10% or they may dispose of 10% without resulting in loss of control. So it means further acquisition of shares or disposal of shares without loss of control. So this is known as what? Changes in the proportion of NCI. Means initially NCI was how much? 40%. Then it become what? 30%. Then again it become what? 40%. So this will result in changes in proportion of NCI. So in CFS, what journal entry will do, that we need to understand. So for further acquisition, so can you see NCI will decrease? So our journal entry will be what? NCI account debit to what? Cash or bank, and any difference will be transferred to what? Other equity. other equity. Because this is changes in equity, so difference will also remain in equity. If there is a disposal of share, then what journal entry? Cash or bank account debit to NCI, and the difference will be transferred to what? Other equity. Correct. So can you see this will be with the amount of cash paid or cash received? Only we need to understand what will be this amount. So this will be what? Proportionate amount of NCI. Proportionate increase in NCI. So can you see NCI? How to calculate? If it is full goodwill, if it is partial goodwill, full goodwill and partial goodwill. So if it is full goodwill, so we will take INA on the date of change, INA on the date of change plus what? Full goodwill multiply by percentage of change, multiply by percentage of change. Are you getting what I am saying? The NCI changes by 10%, so multiply by 10%. So multiply by percentage of change. If it is partial goodwill, then we'll take only INA. We will not take goodwill. INA into what? Percentage of change. Understood this point? Have you understood this point? Correct. So sometime in exam is small question they will not give INA. Suppose they have not given carrying amount INA. So then what we'll do? We'll take what? NCI before change. So suppose NCI before change was how much percentage? 40%. Now decrease by 10%. So this NCI is nothing but 40%. So we want 10%. So we can do 10 by 40 also. So this become what? Percentage of change. In this also same. Whatever NCI given, we'll take what? 10 by 40. Understood this point? So this also we can do if INA information is not given. But if INA information is given, first preference give to this. If not given, then second preference will be given to this. Understood this point? In exam, always be careful. First preference to this, second preference to this. Understood this point? Correct? Have you understood this? Correct. This what changes in proportion of NCI. So for this, I will say small 4-5 marks question can be asked for the journal entry. For the journal entry. Correct? Okay, sir. The next point is what? Next point is what? Loss of control. Loss of control. Loss of control means what? There is a disposal of shares, either full disposal or partial disposal, resulting in loss of control. Resulting in loss of control means there can be two situations. Suppose we are holding what? 60% and we have sold 40%. So we have retained how much? This is also what? Loss of control. Or what can happen? 60% and we have sold 60% entirely. This is also loss of control. So whether it is partial disposal or full disposal resulting in loss of control. In that case, what journal entry will do? We need to eliminate entire subsidiary information from what? CBS. So we need to eliminate the first bank account with the consideration received, fair value of consideration received. If suppose some investment is retained, so that will become what? At fair value. That will come at fair value on the date of loss of control. We need to de-recognize entire INA at carrying amount on the date of loss of control. Carrying amount on the date of loss of control. Any goodwill will be also de-recognized as per the carrying amount on the date of loss of control. If suppose there was some gain on bargain purchase, that will be also what? De-recognized on the date of loss of control at carrying amount. Correct. And NCI if any will be also de-recognized at carrying amount on the date of loss of control. Correct. Any difference of these will be gain or loss, and this gain or loss will be transferred to PL of parent company. PL of parent company means nothing is attributable to NCI. All profit or loss will be attributable to whom? Parent company. This will be transferred to retained earning. Understood? Have you understood this point? Correct. Any doubt? This simple journal entry. Only need to eliminate entire subsidiary information from CBS on the date of loss of control. And investment retained will be recognized at fair value. Now on investment retained, if it is associate, will apply IND AS 28 from that date. If the investment retained is an associate, it will apply IND AS 28 from that date. And if it is what? If it is other entity, means investment other entity, means it is other financial asset, then will apply IND AS 109 from that date, IND AS 109 from that date. And for the purpose of this IND AS 28 and IND AS 109, this will be considered as what? Deemed cost. This will be considered deemed cost. So this will be known as what? Deemed cost. Understood this point? Have you understood this point? Correct? Any doubt? No doubt. Now in this there is one more important point. It is quite possible the OCI component of subsidiary company has been also recognized in CFS. So there are some OCI component. Now OCI component can be revaluation surplus, it can be FCTR, it can be FBTOCI reserve, correct? It may be FBTOCI equity instrument wala reserve, this is that instrument. It can be cash flow has reserve, it can be any other reserve, for example remeasurement reserve in as per IND AS 19. Remeasurement reserve, you know remeasurement reserve as per IND AS 19, actual gain or loss, IND AS 19. If you don't know, भूल जाओ, we'll do in IND AS 19, ठीक है ना. So these are the some OCI component. So this OCI component of subsidiary company to the extent of parent company share will be in the balance sheet of what? CF, in consolidated balance sheet. To the extent of NCI share is automatically added where? In NCI. Are you able to understand? Suppose this is what? 90% and 10%. 90% is what? Parent company. So 10% will be what? NCI. So this 90% to the extent of 90% will come in the statement of changes in equity of what? Parent company. And to the extent of 10% is already added or deducted from what? NCI. If gain to added, if loss to deducted. You are understanding or not? Not able to understand? Let us come. I have done now this. I have done now यहाँ पर other equity कहाँ दिया है? This. यहाँ पे क्या? Share in OCI. Share in OCI. तो revaluation gain we have added to what? Parent company as well as NCI. So this revaluation surplus to the extent of parent company will come in balance sheet of consolidated balance sheet or not? Correct. So when you have disposed of the subsidiary, means then there is a loss of control. Can this need to be also de-recognized? This need to be also de-recognized. So what IND AS 110 says that this will be de-recognized as per respective IND AS. As per respective IND AS, as if that respective assets and liability has been de-recognized. So that will be either reclassified to PL or it will transfer to what? Retained earning as per respective IND AS. Understood? So now you will say, revaluation gain will be transferred to PL or retained earning. This will be transferred to PL to the extent of 90% will be transferred to what? Retained earning. FCTR as per IND AS 21. Till now we have not done IND AS 21. If you know, but IND AS 21 will be reclassified to PL or will not be reclassified to PL? Reclassified to PL. So it will be transferred to PL. Correct? Are you getting what I am saying? But FBT you said debt instrument. This we have done. PL or retained earning? PL. FBT you say equity instrument? Retained earning. Cash flow has reserve. Cash flow has reserve. It will be transferred to PL. And remeasurement reserve. It will not be reclassified to PL. It will be transferred to what? Retained earning. Normally they ask this type of question. Normally revaluation reserve. Remeasurement reserve. This is remeasurement. Huh? Remeasurement reserve. Revaluation surplus. FCTR. FTOCI debt instrument, FTOCI equity instrument, cash flow has reserve. So इसको रट लो. This will not change in any chapter ना, correct? So this also you need to de-recognize. So one question is there. I like that question personally. Still now not asked in exam. So that can be asked in exam. This question 43. I like this question. They are not asking this type of question. They should ask this type of question also. Means when they give this type of question, means you need to be conceptually strong. Then only you can do in exam. What is given? As at the beginning of current financial year, AB Limited hold 90% equity interest in BC Limited. AB Limited hold 90%. तो 90% है. During the financial year, AB Limited sale 70%. Loss of control. Correct. Of his equity interest in BC Limited to PQI Limited for a consideration of 56 crore and consequently loses control of BC Limited. At the date of disposal, the fair value of 20% retained investment is 16 crore. So they have given fair value of retained investment also. And the net asset is given how much? 60 crore. INA is given how much? 60 crore. Whenever they give net asset, it means it is including goodwill. Whenever they say net asset, it means it is including goodwill. When they given INA, INA means what? Excluding goodwill. Chalega? Understood this point? Correct. Now these net asset include the following. This net asset include the following. Correct. That investment classified as FBTOCI of 12 crore. So this 60 crore include 12 crore. But has a related FBOCI reserve how much? 6 crore. तो उसका 90% कितना बताओ? 5.4 crore. That will come in consolidated balance sheet. Net defined benefit liability means IND AS 19 6 crore has a resulted in a reserve relating to net measurement loss means remeasurement loss. Remeasurement loss है यहाँ पर 3 crore. But the 90% how much? 2.7. But it is loss. It is a loss. Equity investment considered not held for the purpose of trading 10 crore for which irrevocable option or recognizing the changes in fair value FBOC has been availed. You remember last class we have an irrevocable option. If selected, it will not be reclassified. Of 4 crore, 90% how much? उसका FBOC reserve how much? 4. 90% how much? 3.6. Net asset in foreign operation means IND AS 21. So whenever there is a foreign operation, any exchange difference is transferred to FCTR, foreign currency translation reserve. So they have given FCTR 8 crore. 8 crore का 90%? 7.2. Correct. बताओ. This will be reclassified to PL or retained earning? PL. This retained earning. This PL. Only this much you need to understand or retain in exam. Correct na? So proper revision also required. Normally what happened? One point we forgot. Either will take more time in exam or will do something wrong. So a simple question become what? Difficult question. Now let us do the journal entry. Journal entry आप बताओ. So we are doing question number 43. बताओ. Bank account how much? Correct. Investment retain how much? How much? 16. Net asset how much? NCI how much? Now NCI not given. NCI not given. So can you say it will be what? 10% of net asset? It will be 10% of net asset now. So 10% of what? Net asset means 6 crore. 10% net asset 6 crore. That is the understood point. Okay, now I think all the point done. So 2, but the gain or loss? Gain transfer to PL how much? 18. Then can you say we need to also do reclassification or transfer as per the nature of all the instrument. So first they have given FBTOCI debt instrument. So that will be transferred from OCI. You will do FBOCI reserve account debit to what? Gain, and gain will be transferred to PL. How much? 90%? Huh? 5.4. Then we have one remeasurement loss. So that will be transferred to a retained earning account debit to remeasurement reserve. Remeasurement reserve. How much? 2.7. Then we have an FBOCI reserve equity instrument. That will be FBOCI reserve account debit to what? Retained earning. How much? 3.6. Then we have an FCTR that will be also reclassified to PL from OCI to PL na, to gain, and gain will be transferred to PL. How much? 7.2. Then they will ask you, if suppose this question come in MCQs, can be asked. They will ask you what is the impact on PL. So impact on PL will be 18 plus 5.4 plus 7.2. If they will ask what is the impact on retained earning, so that is 2.7. Achha, sorry, negative 2.7 plus 3. This is negative na. So this will be impact on retained earning. They may ask this type of question in MCQs also now. Got this point? Correct? Easy. Done. So loss of control also you have understood. Everything is given that only. Correct. This uniform accounting policy is theoretical point, you can do it. Same reporting date is theoretical point, you can do it. Now they have given one question about loss of control of a subsidiary in 2 or more transactions. Sometime what happen? Loss happen in 2 or more transactions, and it is quite possible even though there are 2 transactions, then also control was lost due to 1 transaction. Correct now? So if that has been considered, for example, this is transaction 1, transaction 2, and we have sold 60% we acquired यहाँ पर, we sold 20% यहाँ पर, 40% यहाँ पर. If nothing is given, control was lost यहाँ पर. No, ऐसा मत करो. Suppose this is 70%. So suppose 80%. Suppose 20% and 60%. But if nothing was given, तो control was lost यहाँ पर. But it is quite possible if this transaction is considered a single transaction, means this has been designed in such a way that control may be lost यहाँ पर also. So this point will be applied only when if specific information has been given. These 2 transactions has been considered as single transaction. So whenever these 2 transaction is considered single transaction, you need to find out at which point of time control was lost. So if the control was lost यहाँ पर, then can you say we need to de-recognize, means we need to pass journal entry at this point of time. Or if the control was lost यहाँ पर, we need to pass journal entry at this point of time. Correct? Are we able to understand? So if the control was lost यहाँ पर, what journal entry will do? Can you say bank account you have received for 20% and 60% will become receivable. That will become receivable. So 60% will become receivable. Are you getting what I am saying? And NCI will come what? 20% to INA on which date? On the transaction 1. INA of transaction 1. INA on the date of transaction 1. Correct. To goodwill, whatever. This will be gain or loss which will be transferred to PL. But if the control was lost यहाँ पर, then can you say this whatever you have received यहाँ पर, that will be an advance. So first journal entry will do bank account debit to advance. Bank account debit to advance. And then will pass in second transaction loss of control journal entry. So that is bank account how much? 60% received. Advance how much? 20%. NCI how much? 20%. To INA of which date? Transaction 2. Are you getting what I am saying? Goodwill. And the difference will be gain or loss which will be transferred to PL. Only one question of this nature has been given. Now this type of question may be asked in MCQ or can be asked 4 or 5 marks question in exam. Because whenever new question, this is newly inserted question till now not asked. Whenever new question is given, there is a high chances they may ask in exam. High chances they may ask in exam. So that question you do it. Loss of control subsidiary in 2 or more transactions. So in question they will inform that this is accounted for a what? As single transaction. Then only apply that. If this point is not given, then don't apply that. Then to first 10% will changes in proportion NCI and then loss of control. Chalega? Correct. So they will give you this point. Then uniform accounting policy and same reporting that you can read by your own. This is what theoretical point. Then come to chain holding. Chain holding will do after break. Understood? Normally what I have seen in this chapter, if they are asking a consolidation full fair question, either they will ask whatever we have done till now, or they will ask chain holding. Understood? Either they will ask whatever we have done till now, or they will ask chain holding. Or if these two questions are not asked, then they will ask question from business combination. They will ask question from business combination. So three questions I will say, either up to this one question, or chain holding, or business combination. Correct? So this is a trend in exam. Chain holding, only one question, only one type of question they have given, and that similar question have been asked 3 times. They don't have any other question. Chalega? So we'll do after break. चलो now can we start once again everyone? Okay sir. So before break we have done up to concept number I think 19. ठीक है ना? Now let us come to concept number 20, chain holding. Now whenever they ask a question of chain holding, it means what? The parent company control some subsidiary directly and some subsidiary indirectly. Indirectly means through one or more other subsidiary, correct? So from exam point of view, they will give a question like this: कि parent company has one subsidiary and this S has another subsidiary. So this becomes sub-subsidiary of parent company. So parent company need to consolidate both subsidiary in their consolidated financial statement. So what will be the consolidation procedure that we need to understand? So it is entire thing remains same, correct? Now only one point we need to understand, that in this case we need to first calculate NCI, non-controlling interest, in subsidiary and sub-subsidiary. For example, example number 1, key parent company has 60% in S and 80%, S has what, 80% in SS. So NCI in SS from P's point of view, we are calculating from P's point of view, it will be 100 minus 60, that is how much? For 40%. And NCI in SS will be what? 100 minus 80% of what? Sorry, 60% of what? 60% of 80. So 60% of 80 will be how much? 100 minus 48. So this will be how much? 52%. So NCI will be 50%, 52%. Correct. So it means parent company share in SS will be how much? 48%. So parent company share in SS will be how much? 48%. This can be one question. The first calculation will be NCI. So this one working note will be added. One working note will be added. I will say first working note, now it will become this working note. You first calculate what? NCI share in parent, NCI share in S and SS. Now suppose second example, if I say in this way, parent company hold 60% in SS S and S hold 40% in SS, but P also hold 20% in what? SS. So this also indirectly, can you say P is able to control SS, because total becomes 60%. Total become 60%. So in this case, what will be but the NCI in S? It will be 100 minus 60 is equal to 40%. And NCI in SS will be how much? It will be 100 minus how much directly? 20. And how much indirectly? 60% of 40 is equal to how much? Is 100 minus 20 plus 24. Now 60 of 40%, 24. It becomes 44. So this become how much? 56%. Got this point? So these two type of question may come in exam. Then second point, which we need to identify the date of acquisition. Date of acquisition. However, this is not so relevant from examination point of view, but then also there can be three situations. Suppose this is SS, this is SS. Now, suppose an S, P obtain control on this date, on 30th September, and S obtain control over SS on 30th September only. It means date of acquisition will be same. Date of acquisition will be same. Second example, suppose in S, P obtain control on 30th September, understood? But S obtain control over SS, S obtain control over SS, let us assume on this date, on 1/4. Are you getting what I am saying? Then in this case, from P's point of view, P obtain control over S on which date? On this date. The P will also obtain control of assets on which date? On this date only. So this will be also same date of acquisition. With the date of acquisition from S point of view and SS point of view will be same only. So this date will be not relevant. Correct. Third example can be like this. P obtained control over S on 38 September and S obtained control over SS on 31st March. So in this case, date of acquisition for S will be what? And date of acquisition for SS will be what? 31st March. So this is known as different date of acquisition. This will be known as different date of acquisition. So these two will be same date of acquisition only, same date of acquisition and same date of acquisition. Correct. So you need to identify the date of acquisition. So they may give these three types of question. They may give these three types of question. Now once you have identified NCI and the date of acquisition, now other process remains same. Means first what you will do? Now for S and SS, all working note will be separate. So first do working note number 1 for what? Fair value adjustment for S and SS. So two fair value adjustment. Normally whatever question has been given by ICAI, they have not given fair value adjustment. But if they have fair value adjustment, so first do for S and then do for SS. Then working note number 2 means analysis of profit for S and SS separately. Then do working note number 3 SONA for S and SS separately. Then calculate goodwill or gain on bargain purchase for S and SS separately. Then calculate other equity and NCI for S and SS separately. No, done. So entire thing remains same now. Only one point I need to explain, which I will explain from the question. Only one point I need to explain. So can you say entire thing remains same? All process remains same. Whatever concept we have done till now, everything will remain same. Only one adjustment I need to explain. That adjustment I will explain from one question. Chalega? Understood? So the question let us take. Let us take the question. (45) Given below are the balance sheet of group company comprising LX, MX and NX. LX become parent company, MX become subsidiary and NX will be of course sub-subsidiary. You can see PP, this is investment 70 lakh shares in MX and 9.6 lakh in NX by MX. Chalega? Current asset inventory they have given, you can read. LX Limited hold 85% share in MX which were acquired on 1st April 2020 and MX Limited holds 60% shares which were acquired on 30th September, means after 1st April. It means it becomes different date of acquisition. The following balance, reserve and retained earning, they have given what? Opening balance. They have given what? Opening balance. The business activities of NX Limited are not in seasonal nature. Not in seasonal nature means this point is, I will say, not important. Always we assume in this chapter that profits are evenly earned. The parent company has adopted an accounting policy to measure NCI at fair value applying IND AS 103. The fair value is determined at quoted market price and the given market price is 120 and 125 for both the company. So fair value method, previous series. Correct? Can we do this question? Yes, sir. First we'll do what? Working note number 1. So the NCI will calculate. With the NCI in what? NCI in MX na, kya naam hai? MX. MX will be how much? 100 minus bolo 80% is equal to 20%. Correct na? 85%. 85%. So this will be how much? 15%. NX will be what? Sorry, LX will be how much? LX na? नाम क्या क्या है यार, LX MX NX LX MX चलो LMN, अच्छा LMN, इसको M कर दो, इसको N कर दो, ठीक है ना। ओके, क्या नाम रखते हैं ना। 100 माइनस वाट 85% ऑफ, बोलो 60%, this become how much? 100 minus what? So this become what? 49%. Done. Working note number 2 will be the date of acquisition. But for MX what? Bolo. 1st April 2020. Chalo. And in NX what? 30th September 2020. Low, done. Then working note number 3 what? There is no fair value adjustment. Directly will come to AOP. So first we'll do AOP of which company? MX. So we have what? Retained earning and general reserve. Can you give me first closing balance of MX? Second company. 480 and 760. This you have taken from balance sheet, na? I'm asking closing balance, you are giving opening balance. Nalayak. Closing balance how much? 600 and 810. Can you give me opening balance of MX? 480 and 760. Can you give me the difference? $50. Correct. But any abnormal item given? Any dividend paid given? Any error given? Any bonus given? Super easy question. Kuch hai hi nahi. Even though given, you can do it na. If you want, I can add also. All the points I can add. But if given, you can do or not. They may give fair value adjustment. All adjustment remain same. Only working note will improve na. Only working note will increase. Otherwise, same to same. You can do it right now also if I change the question. Correct? But nothing is given. There is no nothing. So directly will do what? Pre and post. Because the date of acquisition 1/4. So entire become what? Post. So there is nothing pre. This become 120 and 50. Lo, Jindabad. Then working note number 4, you will do AOP of NX. But the retained earning how much? General reserve how much? Closing balance how much? 310. 310. 580. Opening balance how much? 520. Difference बता दे. 160 and 60. बता. Any abnormal loss? Any dividend paid? Any error? Any bonus here? Nothing is there. But in this date of acquisition is what? So it will be what? 6 by 12. How much? 80 and 30 low. Now I'll prepare Sona. First Sona what? MX. So the date of acquisition, date of consolidation, and post may be write on retained earning and general reserve. But the equity share capital how much? MX का 2000. Equity share capital remains same. Then बताओ retained earning, what is the opening balance? Opening balance how much? What is the pre-acquisition profit? Nil. So that will become 480. What is the post-acquisition? 120. Total 600. So means general reserve बताओ. Opening balance how much? Pre-acquisition profit? Nil. This is 760. What is the post-acquisition? 50. Total 810. Jadu. Total 3240, then 3410, done. हो गया. Then we'll do Sona of which company? Now there is no fair value adjustment, therefore I have closed it. If there is fair value adjustment, then we'll do plus minus fair value. Then Sona of NX. So date of acquisition, post, retain earning, general reserve, and date of consolidation. The equity share capital how much? 1600. Then retain earning, what is the opening balance? What is the pre-acquisition profit? 80. Total 230. Post acquisition 80. Total 310. General reserve opening balance post pre-acquisition total 550. Post total, can you give me the total? Two 2690, done. Chalo, this last column, even though you have done mistake, that will not affect your solution. इसको क्रॉस चेक कर लेना, यहां से भी सेम होना. Okay, always cross check. However, last column that will not affect your solution much, because for solution we are taking these two columns. ठीक है ना. Now up to this तो no changes. Now I'll come to what? Goodwill or gain on bargain purchase. Correct. So for we'll do for MX and NX together. बताओ what is the PC? PC बताओ. MX cost price of investment 2620, and this is what 1350. But can I say NX? How much for NX means this is the investment in NX, but how much LX is holding in this? It is 85%. It means if you think from parent company point of view, the parent company investment share is 85% of 1350. So we'll take 85% of what? 1350, because we are consolidating from parent point of view, not from MX point of view. We are consolidating from LX point of view. This become one changes to 85% of 1350. How much? 1147.50. Understood? Then NCI, they have given which method? Fair value method. So can you give me MX? What is the NCI? It is NCI percentage. Already we calculated, right? It is 15% and 49%. So we'll take 15% of number of shares. Can you give me number of shares? Number of shares means you'll go to first share capital. It is what? 2000, and rupees what? 100. So it is 15% of 20. 15% of 20. And what is the market price given? 120 pakka. So this become how much? 360. Similarly do NX. But what is the NCI? 49% of what? 49% of what? 16. 49% of 16. So 49% 16 into what? 125. How much? 980. Done. हो गया. So this become 2620 plus 360 is equal to 2980. 2127.5. From this we'll do minus what? fair value of INA, that is already calculated. For MX how much we calculate? 3240. So minus karo 3240, and for NX how much? 2380. 2380. So can you give me this as gain on bargain purchase? How much? 260 and 252.5. So what is the total gain on bargain purchase? 512.5. 512.5. check करो आंसर सही है ना. So NCA how much they have done? How much NCA? अच्छा sorry, gain on bargain. What is the gain on bargain purchase? Same ना, same answer is coming. I'm just cross checking. ठीक है, okay. So these are also done. Now we'll calculate what? Other equity and NCI. NCI. So we have what? Retained earning, general reserve, and NCI. NCI will have two NCI, MX and NX. चलेगा ना? बताओ. Can you give me first balance of retained earning? This will give me from parent company 1030 and 1150. MX will give me from previous working note. This is what? How much? 360 and 980. Now we'll do plus share in profit of MX. So share in profit of MX. So we have retained earning and general reserve. Correct now? So chalo MX में it is 120 and 50. 120 and 50. In which ratio? So can you divide 120 and 50 into 85 is to 15%. 102 and 18. 18 and 42.5 and 7.5. I hope you are understanding the allocation, how I am allocating. Then plus sharing profit of NX. Same thing will do, retain earning and general reserve. How much total can you give me? It is 80 and 30. 80 and 30. What is the ratio? It is 49% now. So 51 and 49%. Allocate 39.2, 40.80. गलती है ये. This 51% and 49%. This is 49%. अच्छा, this is 49% ना. उल्टा किया ना. lack of understood. The same mistake will happen in exam. Then I am not there to help you. Are you getting? You know everything. In class you are doing mistake when I am with you. So when I am not with you, entire question you are doing by your own. So much pressure, your mind is working so much. उसमें तो mistake होगा ही. If you are not concentrating, if you think about someone, then इसलिए बोलते हैं concentrate. Concentrate. Understood what I am saying? That you learn how to concentrate. Entire game is of concentration. Exam hall. One mistake, you know everything, then also you are doing mistake. बताओ कितना? 40.80 and 39.20. Then 30 बताओ. 15.30 and 14.70. Done. There is no dividend. There is no impairment loss of goodwill. There is no unrealized profit. means that is standard format I have given. Correct. Nothing is there. Done. What is the coming answer? 1172.8. One two zero 7.8, 385.5, 1033.9. Done. Correct. Last adjustment for this chain holding. But how much you have taken यहाँ पर? How much not taken? And balance it will not tally because of that amount. So we'll do what? Minus NCI share in what? Investment in NX. But how much? 15% of 1350. How much? 202. यहाँ से माइनस करना है 202.55. So minus करो. This is coming how much? 1172.80, 1207.80. This is how much? 183. This is how much? What is the total NCI? बताओ. 1 2. Whether answer match check करो. Answer is coming this. Done. Correct. So only two things you need to keep. Everything remains same, all working notes same. Means it is quite possible in chain holding, because I am expecting that type of questions now. Chain holding, they will improve the question. 3 times they have asked similar question. Now they will change pakka. They will give fair value adjustment, they will give dividend paid, they will give unrealized profit also. Are you getting what I am saying? They will give all these 3, but that remains same now. There is no changes. Are you getting what I am saying? Have you understood this point? Even though given, that is not a new question for you. That is not a new concept for you. Only you are doing for the first time directly where? In exam hall. Correct. Only one point. Here you have taken what? How much? 85%. Be careful. Then minus what यहाँ पर? With NCI of MX. Because it is the investment in the balance sheet of MX. You minus 202.5. Now balance will tally. Balance will tally. These are 2 adjustment. Means one adjustment only have 2 part. And other thing remain same. Got this point? Balance will tally. Balance sheet is not so difficult. But any doubt in chain holding? Done. Chain holding also done. Can we proceed? बोलो. Doubt है पूछो. Understood? Correct? Can I proceed? Yes sir. Okay sir. Chain holding done. Chain holding, now you can read it. Miscellaneous concept I have already informed you about all the points. Correct. Meaning of control. This meaning of control may be now important because of MCQs. May be important because of MCQs. Till now they have not asked any question on control definition in exam, but with MCQs now it can be important. Correct now. So meaning of control, they say the control will exist. An investor control an investee if and only if they are following 3 elements. First is power over investee. Second is exposure of or right to variable return from its investment with the investee, from its involvement with the investee. So the keyword is exposure or right to variable return. Then third is what? There is ability to use power. There must be ability to use its power. So there must be power over investee, there must be exposure or right to variable return, and there must be ability to use their power. If these 3 conditions exist, the investor will have control over investee, and the investee will become subsidiary. Investee will become subsidiary. Means all investee are not subsidiary. Even though they are holding 60%, if this condition not satisfied, so it does not mean it is a subsidiary. The word is what? These three elements. Now, from examination point of view, they say 60% and nothing is given. We assume 60% is giving what? Control. That is an assumption we are taking from examination point of view. But 60% you are holding, it does not mean all these three conditions will be satisfied. If all these three conditions not satisfied, then 60% will also not give control. But 40% may give control. Suppose you are holding 40% and these three conditions satisfied, so it means what? Control is there. So for parent subsidiary relationship, but the ownership is relevant or control is relevant? Control. So control may or may not arise from ownership. Are you getting what I am saying? So these three conditions are important. Out of this power over investee is important. So they will, if they will ask a question, they will ask from power over investee only. Means in exam, if nothing is given, we'll assume these two conditions are satisfied. So normally I think if they will disturb you, they will disturb you with power over investee only, correct? So we'll concentrate on which definition? Power over investee. So what they say, power over investee means what? Investor must have existing right which gives current ability to direct the relevant activities of the investee. So this you need to memorize. Can you memorize? Investor has existing rights which will give current ability to direct the relevant activities of the investee. So there are three keywords: relevant activities, current ability, and existing right. So first let us understand what? Relevant activities. So any activities which can be either operating activities or financing activities, means it is a range of operating activities and financing activities that significantly affect the return of investee, which affect what? Investee's return become what? Relevant activities. Correct? Can is relevant activities a matter of judgment? Means it is a matter of judgment which will affect investee's return. Correct? Now it is a matter of judgment and every entity knows about their relevant activities which will affect our return, which activities will affect our return. So if you have a decision making power of relevant activities, it means you have a power over investee. So it means first we need to identify the relevant activities. Correct? Understood? These are the examples of a relevant activity given. You can read. Correct? Now about current ability. So what they are saying, there must be current ability to direct relevant activities. There must be current ability. Current ability does not mean now. Current ability means there must be right to direct that activities whenever meeting is held. Whenever meeting is held. For example, this is the point of time when we are identifying the control. Understood? And right now you are holding 40%. Right now you are holding 40%. And meeting will be held at this point of time. Meeting will be held at this point of time. So right now to can I say you do not have a power. Why? Because can I say you can't take decision because you are holding only 40%. You are only holding 40%. Am I right or not? But you have a potential equity shares of 20%. Potential equity shares means either convertible debenture or you have a call option to buy further equity shares that will give you additional 20% equity shares. So suppose you have a call option to purchase additional 20% equity shares and that can be exercised before meeting will be held, and suppose that can be exercised at this point of time and is a favorable situation, so you will exercise. So right now you do not have that ability, but before meeting held you have an ability or not. So that means you have a current ability and right now you have a power over investee. Even though you are holding only how much? 40%. If you have a potential equity shares of 20% and that 20% can be exercised before meeting held. Ab second situation, 20% can be exercised after 5 years. So it means you do not have current ability because on during the date of meeting you have only how much? 40% and you can't exercise your call option. Understood? Current ability you understood? Current ability you understood? Next point is what? Right. So what they say, there are two type of right. One is known as substantive right, one is known as protective right. So protective right is given only to protect the interest of investor. So protective right is not considered to identify the power of investee, power over investee. Only we should consider what? Substantive right. We should consider what? Substantive right. So substantive right means what? The holder has practical ability to exercise the right. Holder has practical ability to exercise the right. Normally this right will come if you are holding more than 50% of paid up share capital. If you are holding more than 50% of paid up share capital, normally this right will come. But sometimes even though you are holding less than 50% of shares, then also such right may arise. That type of power are known as de facto power. So they have given three examples when they may be de facto power. De facto power means deemed power. Understood? So these three examples are important. These three situations are important from examination point of view. First, they are saying that there is a contractual agreement between the investor and other vote holder. For example, A, B, C, D. A is holding 40%, B is holding 20%, C is holding 20%, and D is holding 20% in A, B, C, D. So okay, A is holding only 40%, less than what? 50% share capital. Of course, they do not have any right to direct the relevant activities of the investee, but what they will do, they will do one agreement with what? B. Now on behalf of B, A will vote. On behalf of B, A will vote. So can I say it will be what? Now 60%. It will be now 60%. So A will now exercise control over what? A, B, C, D. I am saying on behalf of B, who will vote? A. So this is not joint control, it is control. If I am saying they have a contractual agreement to exercise joint control, then that is a joint arrangement. So right now I am not discussing about joint arrangement. In this I am saying that they have done one agreement that B will be sleeping partner. On behalf of B, who will vote? A will vote. The entire decision is taken by whom? A. B is only sleeping. He is sleeping. Understood what I am saying? In that case, A will have what? Power over investee. Even though they are holding what? 40%. My question to you, till now this type of question they have not asked for consolidated financial statement. Suppose the other two condition is also satisfied. Now A is holding 40%. With B they can exercise control or not? They can exercise control. In this case, batao, what will be NCI? What will be NCI? 100 minus 40. Very good. 60%. Very good. Understood. NCI will be 60%. Huh? NCI will be 60% and their share is what? Only 40%. Then also they are having a control over. So this type of question till now not asked. Believe me, this type of question they will give. Entire process remains same. But what student will do? They will take NCI how much? 40%. That will be wrong. Understood? Their ownership right is what? 40%. So NCI is how much? 60%. They have a control over what? ABC because of that contractual agreement. Understood? Second point, what they are saying, ABCD, he widely dispersed holding of other vote holders. They can be one example. Suppose A is holding 40% of ABCD and there are many small shareholders having what? 60%. And these small shareholders do not participate in actively in what? Annual general meeting or general meeting. Correct? Means they will never come in meeting, or they are coming then also they are not participating. They are sometime coming, sometime not coming. So they are not actively participating in what? Meeting. So in this case, can I say A will take only all the decision? A will take all the decision. So even though they are holding 40%, they will be having a de facto power. De facto power. Understood? Last point is potential voting right. Already I have explained. Potential voting right. So if they are holding some potential voting right either in the form of options or in the form of convertible instrument, if the potential voting right are substantive, then they will have de facto power. So what IND AS 110 says that if potential voting right are in the money means favorable. Then potential voting right are substantive and that will be considered for calculation of they will be considered for considering the power over investee. But if they are deeply out of money means they will never exercise. Deeply out of money means they will never exercise. Correct? Means it is a very unfavorable situation. So it means it is not substantive and it will not be considered for power over investee. But sometime it is out of money. Out of money means unfavorable, but they may exercise. So even though it is unfavorable, we can exercise or not. If in future it will give some benefit. So what they are saying, potential voting right is substantive if the investor will able to derive economic benefit on exercising such right. If it is out of money, you need to think the other aspect of the question, and the question is saying that in future they will derive some economic benefit, it means they can exercise, and if they can exercise, it become what, substantive, and therefore it will be considered for power over investee. So this may be important for MCQs type of question कि when it will be considered, when it will not be considered. चलेगा. Then exposure or right to variable return you can understand, ability to use power you can understand. Correct now. So if these all three elements are given, it means what, they have a control over investee, and then consolidation is required. Then control. With this, IND AS 110 is completed. IND AS 110 is completed. Okay, sir. Correct. Now let us come to IND AS 111. IND AS 111 is very easy. There is nothing. IND AS 111. They say कि this is a joint arrangement. Joint arrangement means two elements. Contractual agreement, there must be what? Contractual agreement between two and two parties. Between two or more than two parties. Having joint control. Having joint control. If these two elements is there, it means it become a joint arrangement. So what are the two elements? Contractual agreement and joint control. Joint control means no single party can exercise their own decision. Means if they want to take decision, a unanimous consent is required. A unanimous consent is required. Understood? Understood? Now once it is a joint arrangement, then for accounting purpose, it can be of two types. It can be of two types. Either it can be joint operation or joint venture. Either it can be joint operation or joint venture. Correct? Now what IND AS 111 says that this joint arrangement can be either structured or unstructured. Structured means it is a separate legal entity. Unstructured means it is not a separate legal entity. For example, right now we decided to start a CA foundation class without creating any new company or new firm. So it become unstructured. Suppose we started CA foundation class by creating a new company or new partnership firm, it become what? Structured. So what they are saying, if it is unstructured, then it will be always what? Joint operation. It will be always joint operation. But if it is structured, it can be what? Joint operation, or it can be joint operation or joint venture. Means doubt will come whenever they have given structured arrangement. Suppose they have given structured joint arrangement, then we'll have a doubt it is a joint operation or joint venture. Understood? Correct? So for that we need to understand the meaning of joint operation and joint venture. Correct now? When it will become joint operation, when it will become joint venture. So what IND AS 111 says that if the parties having joint control, have a right to asset and obligation for liabilities, related to joint arrangement, then it is joint operation. But if they do not have a right to individual asset, or they do not have obligation for individual liability, so it means they have a right on what? On net asset of joint arrangement, then it means it is a joint venture. So keyword is what? They have a right on what? Net asset. Here the right on what? Asset and obligation for individual liability, then it becomes joint operation. Understood? Correct? Have you understood this point? Correct. So once you have identified joint operation, now we need to understand the accounting treatment for joint operation and joint venture. So we need to understand what will be the accounting treatment. What is the accounting treatment? Accounting treatment in the books of parties, investor, we can say investor of joint operation. investor of joint operation. Now these parties are of two types. These parties are of two types. One is party having what? Parties having joint control, and parties which do not have what? Joint control. Have you understood this point? Are you able to understand? Correct. For example, just try to understand. If I am saying A, B, C, D, it is holding 40%, 20%, 20%, 20%. Now A, B join together to have joint control over A, B, C, D. So it means A and B can take any decision about A, B, C, D because it becomes total 60%. So it becomes joint control. So these are the party having what? Joint control. And they become party without having any joint control. So there are two types of parties. So first let us understand what will be the accounting treatment in the parties having joint control. This type of parties are known as joint operator. We call them what? Joint operator. Joint operator. Understood? So in the separate financial statement as well as in consolidated financial statement, we should recognize all asset, all liability, all income, all expense of what? Joint operation. Means we should recognize what? What we should recognize? We should recognize what? Its asset and share of asset which are jointly held. Jointly held. Suppose A has contributed building. So can they have entire right on that building? So that building will come in the books of what? A. But suppose they purchase one building together and they have only 20% right. So 20% building will come what? In the separate as well as consolidated financial statement of A. Correct. Similarly, it will also record its liability, their own liability, and share of what? Liability which are jointly incurred. Share of liability which are jointly incurred. Similarly, its income and what? Share of income which is jointly earned, then its expense and share of expense which are jointly incurred, This is the accounting treatment. Have you understood this point? Correct. Parties having joint control, they are known as joint operators. Correct. Let me take one simple example, simple question. If this is the question, AB and BC Limited established a joint arrangement through a separate vehicle, but the legal form of separate vehicle does not confer separation between the parties and the separate vehicle itself. Means they are same only. Thus both the party have a right to the asset and obligation for the liability. It is joint operation or joint venture. It becomes joint operation. As neither the contractual term nor other facts and circumstances indicate otherwise, it is concluded that arrangement is a joint operation. Both the parties have 50% each of the equity interest. However, the contractual terms of joint arrangement state that AB Limited has a right to all building number 1 owned by PQR and obligation to pay all the debt owed by PQR to a lender XYZ. AB and BC have right to all other assets of PQR and obligation to all other liability in proportion of the equity interest. But in this cash will come how much in the books of AB Limited? Can you say cash will come 50%? Building will come full. Building 2 will come 50%. This debt will come what? Full. Correct now. This liability will come 50%. This will be incorporated in the financial statement of AB Limited. That is only given. If you want to read. Understood. This type of question now will be asked in MCQ format. MCQ, this type of question they will ask. Chalega? Simple? Yes sir, very simple. So this you have understood. Now The question is that what journal entry, what accounting treatment will do in the financial statement of party which do not have joint control. So what they are saying, in this case there are 2 points. Ki if they have a right, to assets and obligation for liabilities, correct, then their accounting treatment will be similar to this, follow this only, even though they do not have joint control. But if they do not have such right, or obligation, then it will be accounted as investment in joint arrangement as per IND AS 109. As per IND AS 109. Understood? Correct? Simple. Understood? I'm giving in one format everything. Conclusion of this chapter. Understood this point? Can we proceed? Done. Now coming to joint venture. Now for joint venture also there are two seen parties that have what? Joint control. In SFS of such investor, they are known as joint venturer. They are known as what? Joint venturer. So in SFS of joint venturer, we recognize investment as per IND AS 27. Investment as per IND AS 27. And in CFS, we recognize investment as per IND AS 28. As per IND AS 28. IND AS 28 is next chapter. Means in that case will not incorporate the assets and liability of joint arrangement in the separate and consolidated financial statement of joint venture. Only investment will come. Means in this case you are saying that we are incorporating what? Assets and liability of joint arrangement in the individual as well as consolidated, in the separate as well as consolidated financial statement of joint operator. Understood this point? Yes, sir. Now parties that do not have joint control. So in that case, what they are saying, if they exercise significant influence over joint venture, then can it become associate for them? Suppose they are holding 20 or more than 20% now. So it means they are able to exercise significant influence. If they are able to exercise significant influence, then in SFS 27 and in CFS 28, similar to this. Correct. But if they do not exercise significant influence, then account for investment as per what? IND AS 109. As per IND AS 109. Understood? Correct? Got this point? Simple? Done. So this is the entire summary of this chapter. I think I have done all the points. If you read everything, I have done all the points. I have done this. You just do how to identify structure joint arrangement. This is important. So sometimes they may give you case study to identify what, whether it is joint operation or joint arrangement. So they have given three conditions. If any one condition satisfied, it is a joint operation, otherwise it will be joint venture. This might be important. You can go through, you will be able to understand. Then they have given accounting treatment. Correct? Check karo sab wahi kiya hai. Understood? Now this may be also important for 4 to 5 marks question. Ki special transaction with joint operation. Special transaction with joint operation. what will be the accounting treatment in the individual or consolidated, means separate or consolidated financial statement of joint operator. So there can be two type of transaction. What they are saying, suppose A Limited hold 60% in AB Limited. So AB Limited is what? Joint operation. We are discussing a joint operation, not joint venture. Now joint venture will be covered where? In IND AS 20 and in IND AS 27. Correct. Now we are discussing joint operation. Correct. And this A Limited is what? Joint operator. He is known as what? Joint operator. So there is one more person. There may be one or two more person. I am not saying about them. Now they have sold. They have sold some assets. To whom? AB Limited, or they have contributed some asset to whom? Joint operation. Suppose the carrying amount was 100 lakh and they have sold at what? 80 lakh. So how much loss? Loss is 20. So what will be the accounting treatment in the books of A Limited that we need to understand? What will be the accounting treatment in the books of A Limited, not in the books of AB Limited? Right now all things we are discussing from joint operator books, not joint operation books. Chalega? So in this case what they want to say? Ki 60% is their own share. So we'll do accounting treatment only to the extent of what? 40%. We'll do accounting treatment only to the extent of 40%. So what will do bank how much batao? 40%. How much? 80 ka 40% how much? 32 na? 32 na? Bola re. 32. 2 asset how much? It will come 40. And how much loss? Loss we recognize how much? 8. Means we recognize only loss to the extent of other party share. We recognize loss only to the extent of other party share. Why? Because can I say if that has been sold, so now it has been sold 80, so once again it will come back how much? 60%. So whatever it will be, whatever will come back to their own financial statement that has not been sold. So right has been sold only for what? 40%. So we should recognize gain or loss only to the extent of 40%. Understood this point? Have you understood this point? Correct. Now in this case what they are saying, there can be two more situations. Is there any indicator of indicator? Is there any evidence of impairment? Impairment. Are you getting? Bula, yes. Yes, there is an evidence of impairment. No, there is no evidence of impairment. Bula, if they are saying yes, there is an evidence of impairment, means can I say sale price is equal to either recoverable amount or NRV? Means they have sold at what? This is what? Equal to their recoverable amount or NRV. NRV I am using for inventory. NRV I am using for inventory. And recoverable amount I am using for PP, etc. Correct. It means can I say there is an evidence of impairment? There is an evidence of impairment now. But the carrying amount is how much? And recoverable amount is how much? So there is an impairment loss or not? So it means can I say to their own share loss should be recognized. We will pass one more journal entry. What journal entry batao? The impairment loss to the extent of their own share how much? 12 na? 12. To what? Asset. This journal entry will also do. If there is an evidence of impairment. If there is an evidence of impairment. But if there is no evidence of impairment, then no journal entry. No journal entry. Means this case will arise when sale price is not equal to what? Recoverable amount or NRV. Have you understood this point? Have you understood this point? If question is silent, always assume there is no evidence of impairment. If question is silent, assume there is no evidence of impairment. Are you getting what I am saying? Because ICAI has also given answer like that only. If question is silent, assume no evidence of impairment. Chalega? Second point. This point you have understood. Now second situation is what? A Limited, same thing. AB Limited, 60%. Now they have purchased some asset. They have purchased some asset. Now suppose sale price was 80 and the carrying amount of the asset was 100. So how much loss in this books? 20. Correct. But can I say out of these 60% already recorded in the books of A? 60% already recorded in the books of A. Means now they need to recognize only what? 40%. So what journal entry do? They will do asset. But how much they have purchased? 40% of 80. 40% of 80 means 80 into 40% how much? 32. To bank what? 32. This journal entry will be done in the books of A. Only this much. Understood. Have you understood this? I am expecting this question exam for 4 to 5 marks or in the form of MCQ. Chalega. With this joint arrangement done. Joint arrangement all the point done. Chalega. Bolo. Simple now. Now let us come to what? IND AS 28. IND AS 28 means investment in associate and joint venture. Now associate meaning is given under IND AS 28. Associate meaning is given under IND AS 28. So what do you mean by associate? Associate means what? Any entity where the investor has significant influence and which is neither a subsidiary nor a joint venture. Now significant influence means they have a power to participate in the financial and operating decision making of the investee. Power to participate is presumed when they are holding 20% or more than 20% directly or indirectly. So it is presumed that they will exercise significant influence. If they are not holding more than 20%, it means that will presume that they are not having any significant influence. So some presumption has been taken for what? Significant influence. So whenever in question they have given 20% or more than 20% holding but less than 50% holding, we'll assume the other party is what? Associate. The other party is what? Associate. Chalega? Yes sir. Now coming to the accounting. So they have given which method? Equity method. So in this what we'll do? Adam. So now I am explaining what? Equity method. So step number 1 is what? Calculate goodwill or gain on the date of acquisition. On the date of acquisition means on the date when the investee become associate or joint venture. Date of acquisition means what? On the date when the investee become associate or joint venture. So we'll write down the cost price. Cost price means purchase consideration. Suppose they have acquired 30%, the purchase price is 30% minus fair value of INA. INA of which company? Fair value of INA. INA of which company? Associate na like subsidiary kahan se aaya? We are doing associate or joint venture na. So fair value of INA of which company? Associate or joint venture to the extent of what? 30%. Correct. So this will be either goodwill or gain, but don't call it gain on bargain purchase. It is gain, not gain on bargain purchase. Okay. So don't call it gain on bargain purchase. Gain on bargain purchase only comes with IND AS 103. Correct. And so this is gain, not a gain on bargain purchase. This you can say gain on acquisition. Gain on acquisition, but don't call it gain on bargain purchase. Correct. So either it will be goodwill or gain. Okay, this is goodwill to the extent of 30%. This is goodwill to the extent of 30%. अरे बोलना रे, the goodwill to the extent of 30%. Now whenever goodwill, तो बोला only disclose. Do not recognize. Do not recognize because this is already included in the carrying amount of investment. Already included in the carrying amount of investment. For example, suppose this is what 120 and this is 100. So this become 20. So this 120 have two parts. INA how much? 100. Goodwill how much? 20. So 120 is inclusive of what? 120 is inclusive of goodwill. So it is already included in the carrying amount of investment. Therefore separate acquisition, separate recognition is not required. So only disclose but do not recognize. Only disclose but do not recognize. Understood? Means can I say no journal entry for this? No journal entry for this. But if there is a gain, we are recognized. Gain recognize, and this gain will be transferred to capital reserve. We will pass one journal entry investment account debit to what? Capital reserve. Investment account debit to capital reserve. Understood? So if there is a gain, we recognize it and will pass one journal entry investment account debit to capital reserve. Understood? Step number 1 you understood? Step number 1. Now let us come to step number 2. Step number 2 is what? To find out value of investment as per which method? As per equity method on the date of consolidation. On the date of consolidation. Value of investment as per equity method on the date of consolidation. So first we write down the cost price of investment. We write down cost price of investment, whether including or excluding goodwill. Including what? Goodwill. Correct. But if there is a gain, we'll add gain na. If there is a gain, gain ko add kar do. So if there is a gain on acquisition, add it. Correct na. So gain will be added. So this become what? This become value of investment. Value of investment as per equity method on the date of acquisition. On the date of acquisition. Have you understood this? Now after this we'll do subsequent accounting. So in this first we'll add any share in profit, or if there is a loss, so share in profit or loss of associate or joint venture, that will be added. Share in profit or loss will be added. What journal entry will do? So investment will increase and share in profit is transferred to PL. So what journal entry will do? Investment account debit to share in profit, and share in profit will be transferred to PL. PL of which company? Associate. Investor. We are doing all journal entry in the books of investor. In the books of investor or joint venturer. Correct? Yes sir. This you have understood. What journal entry we do? The investment account debit to share in profit, transfer to PL. If loss, then share in loss to investment. Then we'll add what? Plus minus share in OCI. But what journal entry will do? If there is a gain, then what? Investment account debit to share in OCI, and that will be transferred to OCI में जाएगा. From OCI, other component of equity. Suppose there is a revaluation gain, so it will be transferred to revaluation surplus. If there is a exchange gain, then FCTR. If there is an FBOCI wala gain, then FBOCI reserve. Understood? Yes sir. Then kya? Then we'll do minus what? Dividend received from whom? Dividend received from whom? Associate or joint venture. But what journal entry will do? Dividend received. What journal entry? Bank account debit to investment. Investment will reduce. Bank account debit to investment. But in separate financial statement, as per IND AS 27, it is transferred to PL. So in separate financial statement, what journal entry? Bank account debit to dividend income. But in consolidated financial statement, what journal entry? Bank account debit to investment. Bank account debit to investment. Suppose you are preparing CFS from SFS. So we will pass one adjustment entry. So already what journal entry you have done? Bank account debit dividend income transfer to PL. So what adjustment entry will do? Bolo. Retain earning account debit to investment. Retain earning account debit to investment. Understood? So that you need to keep your mind. If you are preparing CFS from SFS, chalega. And if you are preparing only CFS, then directly entry bank account debit to investment. Bolna cost by bank account debit to investment. I am asking journal entry bank account debit to investment. Chalo, thus this is also done. Ye ho gaya. Now, because can I see you have done one fair value adjustment. So whenever you do fair value adjustment, you have understood from consolidation chapter, there will be some additional depreciation or saving in depreciation. There will be some additional depreciation or saving in depreciation. So additional depreciation will reduce profit. Saving in depreciation will increase profit. So can you say there might be some plus minus depreciation adjustment, fair value depreciation adjustment or not? fair value depreciation adjustment or not? Bolo yes or no? Because they ask this type of question, therefore I am explaining. So if there is some additional depreciation, what you will do? Minus minus what? Depreciation na? Minus which depreciation? Additional na? Minus additional depreciation to the extent of investor share. So it's all are proportionate share, huh? Suppose 30%, all are 30%. All are 30%. Understood? So fair value adjustment to the extent of investor share. To the extent of investor share. Or what we can do? Can I say, suppose the profit is 1000, total profit is 1000, and additional depreciation is what? 100. So we can deduct 100 from these, and directly we can transfer 900 directly यहाँ पर. Either you do separately or you do what together, both will same na? Not able to understand. Are you able to understand what I am saying? Suppose the total profit of associate is 1000. Correct? Now additional depreciation is 100. So what is the net profit? So either directly transfer 30% 900 or do what? First 30% 1000 minus what? 30% 100. Both will be same or not? Both will be same. Correct. I think you have understood. So what is journal entry for additional depreciation? It will increase or decrease investment. Additional depreciation minus करना plus करना minus. So what journal entry? Sharing profit account debit, because it will reduce sharing profit. So sharing profit account debit to investment. Sharing profit account debit to investment. If saving in depreciation, then investment account debit to share in profit. Understood? Journal entry, because they can ask journal entry also. Have you understood this all point? But the first point, second point, third point, fourth point. Now the last point, minus unrealized profit due to downstream transaction. Only downstream, not upstream. To the extent of how much percentage? 30%. This I will explain afterward, but just write down and leave it. I will explain afterward. So these are the total adjustment from examination point of view. This will become value of investment as per equity method on the date of consolidation. Understood? This point I will explain. Minus URP downstream. Till now they have not asked this point in exam. Till now they have not asked this point in exam. I don't know whether they will ask or they will not ask, but they have not given any question of this nature in what? ICAI study material also. But from my point of view, expected. Therefore I am teaching you. Can I say apart from this you have understood all? Apart from this you have understood all? बोल दे yes or no? Now can you read all these journal entry यहाँ से यहाँ तक? यहाँ से पढ़ना start करो. Read पूरा first all the points यहाँ तक. Let's see whether you have understood. यहाँ तक तो पढ़ लो. This यहाँ तक up to point number 5. Unrealized profit don't read. This I will explain. Read यहाँ तक. Just see whether you have understood or not. If you don't have my book, you can read from what? Screen. If you have other book, you read from there. Done. Journal entry पढ़ ले. Because in this chapter they may ask journal entry also. Whenever they say pass journal entry, to pass journal entry in CFS, not in SFS in exam. They have given one question, they say pass journal entry. You will pass journal entry in CFS or SFS? CFS. Always CFS. If they say SFS, then pass journal entry in SFS. Correct? Up to this you read. Done this much? I think understood. यहाँ तक कर लो, ये भी पढ़ लो. Then I explain थोड़ा सा ये वाला point, downstream, upstream. I think up to this so no doubt. Up to this no doubt. चलेगा? Yes sir. Now come to point number 6. What they want to say? Suppose there is an investor A Limited had invested in AB Limited, and they have invested what 40%. So that become an associate, means that has exercising significant influence. Correct. So now it can be either downstream or upstream. Downstream means goods are sold by investor to his associate. Correct. Let me take one example. Suppose cost price of goods sold is 100, has sold at a profit of 20, so sale price is 120. Correct. So their cost price of stock become 120, and let us assume it remain unsold. Correct. So this include profit of which company? Profit of investor included in the stock of associate. Now can you say in CFS of associate whether you will bring this stock? Are you getting what I am saying? In CFS of A Limited, will you bring this stock? No, you will not bring this stock. But instead of that, what do you write on investment? So investment represent proportionate share in the net asset of which company? So if suppose they are holding 40%, can this investment represent 40% of what? Net asset. It means 40% of what? Stock. So can I say this investment is overvalued by this profit to the extent of 40%. Therefore, what journal entry? You need to reduce the investment to the extent of 40% of URP. To the extent of 40% of URP. So what journal entry you do? Retain earning account debit to what investment? Retain, because the profit of this company has been transferred retain earning. So what journal entry will do? Retain earning account debit to investment. And therefore I have said to find out value of investment minus unrealized profit to the extent of investor share only for which transaction? Downstream transaction. Understood this point? Till now not asked, but can be asked in exam, because common question if they can ask in consolidation chapter, they can in subsidiary, they can ask in this also, and they have given one question also, one specific question in ICAI study material regarding this. Chalega, simple. So what journal entry you are doing? Retain earning account debit to investment. Now ulta. A and AB is an associate, and A is what? Investor. 40%. Now they have sold to what? Associate. Let's say cost price is 100, profit is equal to 20. So sale price become 120, and this become what? Stock 120, and let us assume unsold. So this include profit of which company? Profit of associate. Correct. And this profit is already recognized in the books of associate, because share in profit will come. So already we have passed one journal entry, investment account debit to share in profit or not, to the extent of what? 40%. So 20 of 40%, how much we have recognized? 8. This already we have recognized or not? And now this is included in stock of which company? Stock of investor, but we can eliminate whether 20k8. 8, because that much only we have recognized. So we have recognized only profit to the extent of 8 rupees. Therefore we should eliminate only 8 rupees. But what journal entry will do? Batao. Sharing profit account debit to what? Stock. Means this will not affect investment account. This will not affect investment account, because sharing profit is transferred to PL, and from PL it will go to retained earning. Therefore you can say also retained earning account debit to stock. Retained earning account debit to stock. So in downstream, what is the retained earning account debit to investment? Here what? Retained earning account debit to stock. Understood why I have said this point? If they ask value of investment, so elimination of unrealized profit only for which transaction? For downstream transaction. Understood this point? Have you understood this point? Chalega? Okay sir. Now understood? Have you understood this point? Okay. Now there are some important points also. Intercompany debt will not be cancelled. Normally they are not asking any consolidation question. Means they are not asking what? Prepare consolidated balance sheet with subsidiary and associate. But if they ask, so any intercompany balance will not be cancelled in CFS. Because can you say we are not bringing that assets and liability? So any intercompany balance will not be cancelled. Intercompany balance will not be cancelled. Now coming to carrying amount of investment, there are three special points, 1, 2 and 3, which can be also asked in exam. Impairment loss. So can you say in CFS that investment will become single asset, and for single asset IND AS 36 will be applicable. Whenever there is an indicator for impairment, we need to find out recoverable amount, compare with the carrying amount. Any impairment loss will be charged to profit and loss account. Only one clarification has been given. He will not impair the goodwill, because goodwill has not been separately recognized. So will not perform any impairment testing for goodwill separately. Only will perform impairment testing of investment, which include the amount of what? Goodwill. So one clarification has been given. Goodwill that form part of carrying amount of net investment in an associate is not separately recognized. Therefore it is not tested for impairment separately. Chalega? Important for MCQ. Then post acquisition loss. I'll take one question to explain this point. Post acquisition loss. Suppose A Limited purchased 30% of equity shares of B Limited at rupees 5 lakh. Equity share capital retained earning on the date of acquisition was 5 lakh and 10 lakh. B Limited has reported a profit and loss like this. First year, second year, third year, loss, profit. Calculate a carrying amount. So can you say we'll start with the cost price of investment. Cost price of investment is how much? How much? 5 lakh. How much? 5 lakh. Can you calculate goodwill? How much is goodwill? So goodwill will be how much? Can this become INA on the date of acquisition? 15 lakh. 15 lakh become INA on the date of acquisition. Into 30% how much? 4 lakh 50,000. So 5 lakh minus 4 lakh 50. What is goodwill? So can this include how much goodwill? So including how much goodwill? Rupees 50,000 goodwill. This you can calculate. Now can you say from this will minus share in loss? What is the loss of the first year? First year loss is how much? 3 lakh. 10 lakh ka 30% you have done. So 10 lakh ka 30% how much? So of course we can recognize the 3 lakh loss. Correct. So this become 2 lakh carrying amount of investment. Then again there is a loss. We'll say share in loss. How much loss? Total loss is what? 15 lakh ka 30% how much? But can you recognize 4 lakh 50,000? We recognize only to the extent of what? 2 lakh. And how much remain unrecognized? 2 lakh 50,000 remain unrecognized. Means we can recognize only to the extent of what? Carrying amount of investment. And investment will become nil. Means investment cannot become negative. Investment cannot become negative. Now next year there is this profit. So how much share in profit? 10 lakh. 10 lakh 30%. 3 lakh. From this, what they say, first you absorb this loss. First you set up the loss which was not previously recognized. So how much you will absorb? How much left? That only you can recognize. So you can recognize only to the extent of what? 50,000 in the subsequent year when you are earning profit. When you are earning profit, it means carrying amount become what? 50,000. So I am expecting this type of also question in exam can come. Understood? This also done? Chalega? Yes, sir. This also done. Then the last point is about long-term interest that in substance form part of entity's net investment in associate or joint venture. Once again, may be important for MCQs. May be important for MCQs. Correct. Now what they want to say? What they want to say? All the receivable and payable, all the receivable and payable are of two types. Correct. One is for which settlement is planned, and for which settlement is not planned, and for which settlement is neither planned nor likely to occur in foreseeable future. For example, just try to understand, everyone. It's simple, but suppose if I have given 10 lakh to my father, will I do any contract for settlement? I have given 10 lakh, correct now, and I know he will give me, but the settlement is not planned. Similarly, the investor may give some amount to what associate, for which settlement might not be planned and which is not likely to occur in foreseeable future. Means can it is as simple as one type of permanent investment? Yes or no? So what they want to say, if there are some receivable or payable for which settlement is not planned, for their accounting to IND AS 109 will be applicable. For the accounting will be done as per IND AS 109, but in balance sheet that will be added to what? Carrying amount of investment, to the investment, to find out carrying amount of investment in associate or joint venture. So you need to just find out what are that long term receivable or payable for which settlement is not planned, that will be added to the investment, and this will be known as net investment in associate or joint venture in CBS. So it will be presented in this way in CBS. Understood? Are you getting what I am saying? So this amount will be presented as an amount of net investment in associate or joint venture in CBS. This type of question can be asked in what? MCQ. So for accounting, what we are following for this? And for this accounting we are following 28. So accounting we are doing as per respective IND AS, but in balance sheet a net amount will come. So receivable will be added and payable will be deducted, and net amount will come in the balance sheet. Any receivable or payable for which settlement is planned, that will not be added deducted. That will be in the financial asset and financial liability as per their respective nature. Understood? Correct. This point have you understood? Chalega? Yes, sir. This also done. Then discontinuation of equity method. Well, there are two ways of discontinuation. When any associate or joint venture becomes subsidiary, so can you say on that date IND AS 103 will be applicable and will discontinue what? Equity method. Will discontinue equity method. It is as simple as step acquisition. Suppose initially we acquire 40%, then again we acquire 20%. So then it will be discontinuation of what? Equity method. Once the control is obtained, and this is nothing but step acquisition. This already we have done in consolidation chapter. Are you getting what I am saying? Consolidation means consolidation of subsidiary company. Correct. Step acquisition. If the investment becomes subsidiary, then discontinue what? Equity method from the date when the control is obtained, and from that date apply IND AS 103 and IND AS 110. Chalega? Then second point is what? The disposal of shares. Disposal of shares means, just try to understand. Suppose you are holding 40%. So either you will sell 20% or you will sell 40%. 30%. Either you will sell 30% or you will sell what? 40%. So either there will be partial disposal or full disposal. Correct. So in that case, how to calculate gain or loss? So first we will find out fair value of consideration received. Consideration received. Then fair value of investment retained. This will be total. From this minus carrying amount of investment in associate or joint venture. This will be gain or loss which will be transferred to PL. This will be gain or loss which will be transferred to PL. Understood? First find out fair value of consideration received. Then find out fair value of investment retained. Then from this minus carrying amount of investment in associate or joint venture. Correct. This will be gain or loss. This gain or loss will be transferred to PL. Gain or loss will be transferred to PL. Understood? This point you understood. But sometime what happened? Just try to understand. Suppose you have 40% joint venture and you have sold 10% and joint control lost. But can 30% to become significant influence? So in this case what happened? Joint venture become associate, or associate may become what? Joint venture. So whenever joint venture become associate or associate become joint venture, so we do not discontinue equity method. We do not discontinue equity method. Understood this point? We do not discontinue equity method. Correct. In that only will de-recognize the carrying amount of investment sold. Will de-recognize the carrying amount of investment sold. And for the balance portion, will continue what? Equity method. Understood? So in this case, suppose 10% sold, we will find out the fair value of consideration received minus carrying amount of investment sold, and this will be gain or loss which will be transferred to PL. But for 30% that carrying amount will be retained, and that will be, for that will continue what? Equity method. Understood? Correct? Yes sir. However, for this particular point number A, I will take one question that is very important question in business combination chapter. So there is one more point I will explain there. Chalega? I think you have understood this also. Then this might be also important for MCQs. Classification of investment in associate or joint venture as held for sale. So guys, once they become held for sale, IND AS 105 will be attracted. IND AS 105 will be attracted. Then we'll measure at carrying amount of fair value less cost of disposal, whichever is lower. But one doubt will come. Just try. There can be three situations. Situation number one. You suppose you are holding 40% and you have decided to sell entire 40%. Till now not sold. Decided to sell. So can you say 40% entire may be classified as held for sale? So for this now you will apply what? IND AS 105. Correct. Now it is actually sold यहाँ पर. So but during this period you are applying IND AS 105 ki IND AS 28. During this period you will apply IND AS 105 or IND AS 28? 105. You will apply IND AS 105. Second point. Suppose you are holding 40%. You have decided to sell 30% and you have decided to retain 10%. Quite possible? Correct. So this 30% will become what? Held for sale. Held for sale means can I say suppose actual sale यहाँ पर हुआ. So for this you will apply IND AS 105 ki IND AS 28. 105. For this you will apply what? IND AS 105 ki IND AS 28 ki any other IND AS? Batao what? Huh? 109? No, bola 28. Because it is not yet sold and you can exercise significant influence. Understood? And after that you will apply what? 109. Understood what I am saying? Have you understood? Correct. यही बताना था. फिर बताओ. Suppose 40% and you have decided to sell 10%. Retain how much? 30%. For this you will apply what? This is actual sale. You will apply what? बताओ. For this you will apply what? And after this you will apply what? 28. Understood? This type of question they have not yet asked. If they start asking this type of question, now to with MCQ they can ask. Correct now. So this become more conceptual question now. More conceptual. We don't revise only this type of points. Whether we revise, we don't revise, but थोड़ा समझ जाओ क्या बोल रहा है. देखो, any retained portion of an investment in an associate or joint venture that has been not classified as held for sale till the time of disposal of the portion account by using what? Equity method, even though it is 10%, even though it is 10%, correct. After the disposal of the portion, after the sale, account as follow. If it is associate or joint venture, apply what? Equity method. If it is not an associate or joint venture, apply IND AS 109. So three situations I have given. All these three situations may come in exam for MCQ type of question. Done. This also done. This chapter is more or less completed. Correct. Now last point means separate financial statement. Separate financial statement is not so much important. Correct. However, MCQ question can be asked. The separate financial statement we can read. Only I need to inform you only one point. In the separate financial statement, we apply respective IND AS for other assets and liability. Only for investment in associate, joint venture or subsidiary, we apply IND AS 27. Means in separate financial statement, PP will be accounted as per 16. And investment property as per, but investment in associate, joint venture or subsidiary as per 27. And they say ki it will be measured either at cost or in accordance with IND AS 109. Means they have given two options, either cost model or fair value model. Now this fair value can be either FBTPL or FBTOCI. Understood this point? Actually there are three options given, cost or FBTPL or FBTOCI. If nothing is given, always will assume what? Cost. Then balance point you can read, my help is not required. Exemption from consolidation equity method. Now it can be also important because of MCQs. All these para now become important for MCQs. Correct. So what they are saying, ki any exempt, this parent company is exempted from consolidation if 3 points are if 4 conditions are satisfied. How many conditions? 4 conditions are satisfied. First condition, a parent is a subsidiary of another entity. It is a question of what? Chain holding. Question of chain holding. So parent is a subsidiary of another entity. Correct. First condition. Further, their owner, other owner means apart from their parent, their other owner means NCI. Other owner means NCI now have been informed that they are not preparing consolidation and they do not object to it. Means they have given some information to the other owner that we are not preparing CFS, whether you have any objection. They will say no objection, Jindabad. So it means they may be exempted from consolidation. Then such parent are neither listed nor in the process of listing. Means it should not be a listed company or nor in the process of listing. Last point, the ultimate or intermediate parent company must be preparing CFS. Means their parent, their either ultimate parent company or any intermediate parent company must be preparing CFS. Then only they are exempted. If their ultimate parent company or intermediate parent company are not preparing CFS, then they are not exempted from consolidation. Same point is given for exemption from equity method. Same point, similar point has been given. You can read, similar point is given. Understood? Then as per IND AS, investment entity, any investment entity are also exempted from consolidation. Any investment entities are also exempted from consolidation if two conditions are satisfied. If the parent is an investment entity and the parent is required to measure all their investment at FBTPL, means all the investment are held for the purpose of trading. If all the investment are held for their purpose of trading, it means there was no intention to get any benefit, so they will not prepare any consolidation. So what is the investment company meaning is given, you just read down. This meaning is also important. Meaning of investment entity. This you can read. Now this might be also one question has been given about accounting for changes in investment equity status, entity status, sorry, investment entity. Means what they want to say is, suppose there was one parent which was initially not exempted from consolidation, but at this point of time it become investment entity. So now it is exempted. Correct now. So it will be considered a deemed loss of control. will consider deemed loss of control. Understood what I am saying? Correct. So what journal entry will do, batao? In this, can I say, we'll say investment, whatever is the investment, now will come at fair value. To INA will be de-recognized at carrying amount. To goodwill will be de-recognized at carrying amount. NCI will be de-recognized at carrying amount. And the difference will be gain or loss, which will be transferred to PL. Understood? Correct. Second, initially it was investment entity exempted, and now it is not a investment entity. So it means, can I say, it is deemed controlled. Deemed control has been obtained, means on this date it will be considered as that control has been obtained. So in this case, what journal entry will do? Are you getting what I am saying? Correct. So this investment, whatever was there, will be considered as previously held equity interest. So what journal entry will do? INA account debit at fair value. To bank to nothing, but to investment will come. This will previously had equity interest at fair value, and the difference will be goodwill or gain on bargain purchase. And any remeasurement gain will be transferred to PL or OCI as the case may be. Any remeasurement gain means this will be considered as one type of, I will say, control has been obtained without paying any consideration. Understood? So it will be we can say this fair value will be considered deemed consideration. We can say deemed consideration. Chalega. So one question of this nature has been given in ICAI study material that you can refer. This question now can be asked either in the form of MCQs or a direct question of 4 to 5 marks. Chalega. Because all questions whatever given ICAI study material are important. I always assume that. Then when SONA format is given, you can do it. So with this, I have done my job regarding what? Consolidation. Correct. I have taken less question because my focus was on what concept. This chapter, I will say, practice you can do. If you know all the concept, so in this chapter, concept become more important because practice I know you will do, and every question similar type of format. So ultimately, concept ज़्यादा important है. So I focus on what? Concept. So once you have understood the entire concept, now whenever you have a doubt about concept, so that concept revise bar, because there only you will do mistake. So if you are doing some mistake in one concept on a repeated basis, so just revise it before exam. So that you will find out when you are doing some questions. So this point you have done mistake, this point you have done mistake. Why you are doing mistake? So try to understand the concept and then retain it, and before exam just revise it. So from my point of view, the chapter done. We'll take a break, short break. We'll take after that IND AS 24. Okay, sir? Okay, sir? Okay, sir. Somebody asked you, sir, do please question of November 2023 attempt. Already that has been done by me in my live video session. It is in YouTube. You just watch that. Okay. So if you want to do that question, already it is in my YouTube November 23 entire explanation I have given with the suggested solution. So that you refer there. Okay. Okay, sir. Chalo. We'll take a break of 50 minutes. 1-5. So before break we completed consolidation chapter. Now we'll do today's last chapter, means that only one chapter is left for today, that is related party disclosure. Very simple chapter, very simple chapter. Now this chapter there are 3 points which we need to understand. One is we need to understand what is the meaning of related party relationship, then what is the meaning of related party transaction, then disclosure requirement. Can you say for this chapter disclosure requirement important? Because the name is only what related party disclosure. Therefore in exam they may ask related party disclosure also. Correct? Now first, what is the meaning of related party relationship? So that has been defined in para 9. Normally para number is not relevant from examination point of view. But for this chapter I always say to the student, if you can memorize and write down the para number, that will give some impression to what? Your evaluator, and they will give full mark. So if you can retain, then write. If you can't retain, don't write. So para number is what? Para 9. In para 9 there are 2 sub para, para 9a, para 9b. So para 9a define the relationship between reporting entity and a individual and a person. So reporting entity and a person. Para 9b define the relationship between reporting entity and other entity. So first we'll do para 9a. Now para 9a has 3 sub para. One is 1, 2, 3. So there are 3 sub para. Para 9a1, para 9a2, para 9a3. So in exam, suppose they have given question for para 9a3. If you can add on as per para 9a3, it will give impression. But if you forgotten, don't write. Then add on as per para 9a only. Correct? Don't write on para 9a2. Got this point? That you know from law and what? Income tax, that we should not write wrong sections. Better don't write. Better don't write. Okay, na? So we'll discuss from para number wise only so that you can retain it. So first para 9a1 what said ki any person or the close family member of that person. Any person and the close family member of that person is related to reporting entity if that person has control or joint control of the reporting entity, or has significant influence over the reporting entity, or is a member of KMP of that entity, or parent of reporting entity. Means is a member of KMP of either reporting entity or a parent of reporting entity. Means simple word, if I say in this way, just try to understand. Mr. Ram has control over Ram Limited. So can I say for Ram Limited, Mr. Ram is what? Related party plus his close family member, plus his close family member. Correct. If I say in this way, Mr. Ram has joint control over Sita Limited. So can I say Mr. Ram plus close family member of Mr. Ram is related to what? Sita Limited. If I say in this way, Mr. Ram has significant influence over Lakshman Limited. Lakshman Limited. Correct. So Mr. Ram and the close family member of Mr. Ram is related to what? Lakshman Limited. If I say in this way, Mr. Ram is KMP of Hanuman Limited. Hanuman Limited. So Mr. Ram plus close family member of Mr. Ram is related to what? Hanuman Limited. Correct. And in this case, if Hanuman Limited control, suppose Ravan Limited. Understood what I am saying? So it means Mr. Ram is a KMP of parent of what? Mr. Ram is a KMP of parent of Ravan Limited. So for Ravan Limited, Mr. Ram and the close family member of Ram will be also related party. So this is para 9a1, 9a1, 9a2, 9a3. Understood? Correct. Very simple. I think you have understood. In this, no discussion required. Correct. Only I need to give you the meaning of close family member. So close family member means they have given spouse, domestic partner, brother, sister, father, mother, person, children from a spouse, children from domestic partner, dependent of person, dependent of spouse, or dependent of domestic partner. The difference in spouse and domestic partner is what? Spouse means legally married. Domestic partner is legally not married. This is the difference, domestic partner and spouse. Correct now? Understood? We will not go into depth of this definition. I hope you have understood my emotions. Chalega? Correct. Now coming to next point, para 9b. Para 9b, what is the meaning of, means what is the relationship between reporting entity and other entity? So in this we have 8 subpara. How much? 8 subpara. Means 9b1 to 9b8. First one is very easy. The entity and the reporting entity are the member of same group. Same group, whenever you say group, group means consisting of parent and subsidiary. It will not include associate and joint venture. So when I am saying this, so it means what? You suppose P has S1, S2, S2 has what? S3, S4, S4 has S5. So all these members of the same group are related to each other. Means P will be related to all the company, S1 will be related to all the companies, so all are related to each other. So it will consist of parent company, subsidiary company, or fellow subsidiary. Fellow subsidiary means what? Any two subsidiary which have ultimate, which is controlled by what? Same controlling party. Understood what I am saying? So this becomes fellow subsidiary. So fellow subsidiary will be also related to each other. Chalega? Yes sir. Next point, what they are saying, one entity is an associate or joint venture of other entity or the member of group of which other entity is also a member. Means what they want to say is, suppose P has what? Associate and joint venture. P has an associate or joint venture. So P will be related to what? Associate, and P will be also related to joint venture. Correct? But if suppose P has S, subsidiary, and this subsidiary has what? Associate and joint venture, so whether P will be related to this associate? Bola yes. Whether P will be related to joint venture? Bola yes. Means what they are saying, now if you read, one entity is an associate or joint venture of other entity or the member of group of which other entity is also a member. So in this you can see this associate and this joint venture is the associate and joint venture S, of which P is also a member. Means this S is the member of group of which P is also a member. So for P, these all are related. For S also all these are related. Understood this point? Correct. Done. So this is para B2. Para 9B2. Now point 9B3 is what? Both entities are joint venture of same third party. Both entities are joint venture of same third party. Means if I am saying P, and P has two joint venture 1, joint venture 2, these two are related to each other. These two are related to each other. Understood? Means if I am saying P has a joint venture and joint venture, correct, and S has another joint venture. So the joint venture 1, joint venture 2, joint venture 3, correct. Now whether this joint venture 1 and joint venture 3 are related? Well, no, these are not related. So these have what? One same third party. They are joint venture of same third party. Understood? Yes sir. Then what they are saying, one entity is a joint venture of a third party, another entity is an associate of what? Third party. Means in this case what they want to say, if suppose P has a joint venture, P has a joint venture and P has an associate. So these are also what? Related to each other. These are also related to each other. Means can I say in this way, P has two subsidiary, these are related to each other. As per para 9B1, if P has a joint venture and subsidiary, these are also related to each other. As per para 9B2, if P has a subsidiary and associate, so this will be also related to each other. As per para 9B2, yes or no? Correct. If P has a joint venture and joint venture, this will be also related to each other. As per para 9B3, if P has a joint venture and associate, this will be also related to each other. As per para 9B4, and P has an associate and associate, this will be also, these are not related to each other, and this is dangerous in exam, huh? So co-associate are not related to each other. Co-associate are not related to each other. So this is the explanation of all the points whatever we have done till now. Understood this point? Correct? Chalega? Now next point. What they are saying, the entity is a post-employment benefit plan. The entity is a post-employment benefit plan. So post-employment benefit plan is nothing but whatever you have done plan asset in IND AS 19. Remember plan asset IND AS 19, we contribute to a separate entity that become a plan asset. That is known as post-employment benefit plan. Post-employment benefit plan for the benefit of employee of either reporting entity or any entity that are related to reporting entity. Means any post-employment benefit plan will be also related to each other. Any post-employment benefit plan will be also related to each other. Correct? Yes, sir. The next point is what this is also thoda sa important from exam point of view. What they are saying, the entity is controlled or jointly controlled by a person identified in para 9a above. The entity is controlled or jointly controlled by a person identified in para 9a above. Correct? Understood? Next point, the person identified in para 9a1. Para 9a1 means control or joint control. A person identified in para 9a1 person has significant influence over the entity or is a member of KMP of either reporting entity or parent of reporting entity. I just combine these two and try to explain this point what they want to say. Suppose if I am saying Mr. Ram has control Ram Limited, X Limited and Y Limited. X Limited and Y Limited. Control or joint control. So this will be related to each other. This will be related to each other. Okay. Now if I say Mr. Ram control or jointly control and has significant influence over these two, means some control jointly control X and has a significant influence over Y. This will be also related to each other. Correct? If I say Mr. Ram has control or jointly control and is a KMP, are you getting? So this will be also related to each other. This will be also related to each other. Correct. Now if I say Mr. Ram has significant influence and significant influence over X and Y, these are not related to each other. These are not related to each other. These are not related to each other. I am just giving the conclusion of this point. If I say in this way, Mr. Ram is a KMP of X and has a significant influence over Y, this is also not related to each other. This is also not related to each other. If I say Mr. Ram is a KMP of X and is a KMP of Y, so this will be also not related to each other. So only just try to understand, whenever Mr. Ram control or joint control one of the entity, then it will become what related to each other. So you can see here control joint control, here also control joint control, here also control joint control, but here there was no control or joint control, here there was no control joint control, here there was no control or joint control. So this become outside the scope of what? Related party relationship. So only exam just find out if one of the company they control or joint control, then it become related to each other. Have you understood this point? Have you understood this point? If you see this also, here also control, joint control, joint control, control, joint control, joint control, but here no control, no joint control. Have you understood this point? So in one of the entity they have control or joint control, then relationship is created. Otherwise relationship will not be created. So in this way in exam you can do by applying common sense. Otherwise you will be confused in exam if they have given a big structure of our relationship. Understood this point? I hope this will help you. This will help you. So this all point is from these 2 points 6 and 7. So 6 and 7 I have done combined explanation. So once again I read, the entity is controlled or jointly controlled by a person. The entity is controlled or jointly controlled by a person identified in para 9A above. So entities controlled or jointly controlled by a person who is already identified in para 9A 1, 2, 3 above. Correct. Or a person identified in para 9A1. A person already identified in para 9A1 has significant influence over another entity, or is a KMP of other entity, or a parent of other entity. Understood? Chalega? Yes, sir. Then last point is nothing but, can I say, in this point we have covered, if I am saying this point, so we have covered what? Individual who is a KMP, but sometimes entity also provide KMP services. Sometimes entity also provide KMP services. So what they want to say? Ki any entity which provide key management personal services to a reporting entity or to the parent of reporting entity will be also what? Related party. Means, just try to understand. Suppose there is one X Limited which provide KMP services to what? Ram Limited. Then this X Limited is also what? Related party. Plus his group company, all the group company will be also what? Under that scope. Means group company is nothing but close family member. So when I am saying KMP plus close family member, so here what? X Limited and group company will be related to what? Reporting entity. And suppose Ram Limited control what? Lakshman Limited. So here X Limited is a KMP, is providing KMP services to Ram Limited, which is a parent of Lakshman Limited. Therefore X Limited is also related party for Lakshman Limited. Understood? Plus their group company. Okay, understood. All the points done. So this become related party relationship. One clarification has been given that associate will include subsidiary of associate. Means if the associate is related, so their subsidiary will be also related. Joint venture will include subsidiary of joint venture. If joint venture is what? Related, so their subsidiary will be also related. Correct? But associate or joint venture of joint venture will not be related. Have you understood this point? थोड़ा सा इंग्लिश हो गया. Suppose parent company has one joint venture, they are related, so their subsidiary will be also what? But their joint venture will not be related. Their associate will not be related to this parent company. This parent company is reporting entity. So if the parent company has a joint venture, so this will be also related. This is related, but this is not related. This is not related. Similarly, if parent company has an associate, so their subsidiary will be related. Bolo yes or no? But their joint venture and their associate will not be related. Correct? Understood this point? Have you understood this point? Bolo? Means what I am saying, parent company has an associate and associate has one subsidiary. So for parent company this is related, so this will be also automatically related. But if the associate has an associate or joint venture, these are not related to whom? To parent company. I am saying parent company, not associate. Associate ke liye related hai, but for the parent company they are not related. So any associate will include subsidiary of associate. Joint venture will include subsidiary of joint venture. Chalega this much? Yes sir. Now they have given some exclusion from the definition of what related party relationship. They are saying these are not related party relationship. For example, two entities are not related simply because they have a common director. So simply because they have a common director, these two entities will not become related party. Two entities are not related parties simply because they have a member of KMP of one entity and has a significant influence over the other entity. Already I have explained it there. Correct now. Suppose Mr. Ram is a KMP of one entity and Mr. Ram is providing significant influence over another entity. So these are not related to each other. Already we have done that point. Two joint venturers are not related simply because they share joint control of a joint venture. Means suppose there is a joint venture and it has two investors, investor A and investor B. So these are related, but they are not related to each other. Means the joint venturer are not related to each other. Joint venturer are not related to each other. Correct? This B is related to joint venture. A is related to joint venture, but A and B are not related. A and B are not related. Understood? Yes, sir. Then provider of finance, trade union, public utility company, government department and the agencies, they are just giving a clarification. These are not related party. Similarly, customer, a supplier, any franchisee, any agent, any distributor with whom entity do a significant volume of transaction, they are just giving a clarification. These are not related parties. Suppose I have only one customer. So of course customer can exercise significant influence or not. Because I have only one customer, so whatever he will say I will do or not. Correct. But then also it is not a related party because customer to customer hai. Understood? Yes, sir. Then what do you mean by related party transaction? Bola, any transaction between reporting entity and related party will be a related party transaction. It may be in the form of transfer of resource. It may be in the form of transfer of services. It may be in the form of transfer of obligation. It may be in the form of transfer resource. It may be in the form of transfer of services. It may be in the form of transfer of obligation. Whether a price has been charged or not charged, whether the price is adequate or not adequate, means if the transaction has been done irrespective of price charge, it will be a related party transaction. Then coming disclosure. There are some disclosure which is applicable to all entity even though there is no related party transaction. Correct now, even though there is no related party transaction. So what they want to say, the relationship between parent and their subsidiaries shall be disclosed irrespective of related party transaction. So they should disclose the name of parent company and ultimate controlling party. They should name who is their parent company and who is the ultimate controlling party. And if the parent company and the ultimate controlling party is not preparing CFS, they need to mention the name of next most senior parent company who is preparing CFS. For example, suppose Mr. Ram control Ram Limited, Ram Limited control Sita Limited, Sita Limited control Lakshman Limited, and Lakshman Limited control Hanuman. So Hanuman is reporting, but who is the parent company? So their name. Who is the ultimate controlling party? Ram, their name. Now if suppose Lakshman is exempted and Mr. Ram to will not prepare CFS, suppose Lakshman Limited may be exempted now. If that 4 point is satisfied, so they need to mention the name of Sita Limited or Ram Limited if they are preparing CFS. So if Sita is preparing, so Sita, because that becomes what next most senior parent company. So next most senior parent company who is preparing CFS, their name is required to be disclosed. Correct? Yes, sir. Then disclosure of KMP compensation. We should also disclose the KMP compensation in the form of short-term employment benefit, long-term employment benefit, post-employment benefit, termination benefit, any share-based payment. This need to be given category wise. Then disclosure of related party transaction. So bola ki if there is a related party transaction, following information need to be disclosed as per para 18. So para 9 into 2, 18. So you should write down as per para 18. The following disclosures are required. So what are disclosure? Name of the related party relationship. Nature of the related party relationship. Nature, whether it is an associate, joint venture, subsidiary. Nature of related party transaction. Nature of transaction, whether it is sale, purchase, loan given, loan taken, whatever. Amount of transaction, volume of transaction, even though the price is adequate. Amount of outstanding balance, whatever is unpaid, unsettled, that amount we need to disclose. Any provision for doubtful debt related to amount of outstanding balance, means any allowance. However, the name should be allowance, write down. Any allowance for what? Doubtful debt. Any allowance for doubtful debt, for that outstanding balance require disclosure. And if any expense recognized during that period in respect of bad and doubtful debt need to be also disclosed. So these are the following points which require disclosure. Can you repeat with me? First is what? Nature of relationship, the nature of transaction, then volume of transaction, then what? Amount of outstanding balance, then allowance for bad and doubtful debt, then any expense which has been recognized in that year in respect of bad and doubtful debt. Chalega. Then circumstances under which disclosure of para 18 is not required. This may be important from exam point of view. There are two circumstances where these disclosures are not required. So what they are saying is, suppose any government, whether it is state government, central government, control or jointly control or has significant influence over any company, so they become related party. But any transaction between these two are related party transaction but are exempted from para 18 disclosure, are exempted from para 18 disclosure. Similarly, suppose there are two companies, X limited and Y limited, which are under the control or joint control or significant influence of same government, so this become related party. So any transaction between these two are related party transactions. These are also exempted from what? Para 18 disclosure. These are also exempted from para 18 disclosure. Only para 18 disclosure. Understood? Correct. So this transaction and this transaction are exempted from para 18 disclosure. But they say ki if they are exempted, okay, but they disclose these 4 points: name of the government, nature of relationship, the nature amount of only significant transaction, which are individually significant transactions, and for other transactions that are collectively but not individually. So other transactions which are collectively but not individually significant, a qualitative or quantitative disclosures are required. Means you can give either in percentage form or in amount form. That disclosure you can give this much transaction has been done, which are collectively what? Significant. Okay. So these disclosures are required. They are exempted from what? This disclosure. Understood? Correct. So this can be one important question. However, similar question has been given in RTP many times, so it can be asked in exam, or that can be asked in the MCQ format also. Chalega? Yes, sir. Done. Then disclosure are not required when such disclosure are in conflict of entity's duty of confidentiality. So if suppose we are not supposed to disclose because of duty of confidentiality. For example, bank should not disclose their information about customer. Now that customer may be KMP. So if they have done some transaction with respect to customer, that information should not be disclosed. In CFS, can you see intra-group transaction will be eliminated? So if eliminated, that disclosure is not required in CFS. Correct? So this can be also asked in the MCQ format. Chapter is over. This chapter is totally based on this content only. If you know this content, you can answer. If you don't know this content, you can't answer. So total revision of content is required. Question is required only for practice. If you forget this content, can I say you can't write in exam? So content is important. Question to kuch bhi kar loge. Any question asked, you can do it now. Correct? So some MCQ given, just do it for your practice. I think now from this chapter was not important from questions point of view. Means I think only one attempt they have asked a question regarding this. But with MCQ, pakka one question will be there. One question pakka from this. So 1 mark to aega. So this chapter we are doing only for 1 mark. Every mark is important, huh? Done. 2 days done. Chapter done. ठीक है ना? Consolidation, I think I have done my job. ठीक है ना? Do all the questions. If you have any more point which you have, I think you have understood. But any question if you find difficulty, just inform me. So last day we'll do that. Okay, last day we'll do that. Not tomorrow. So tomorrow there will be no class. Tomorrow no class. We'll meet on Monday. Monday, Tuesday, Wednesday. 3 days are left. 3 days will close the topic. So tomorrow, because you are not coming, so do all the chapters, whatever, means start from the beginning, whatever you have not done, start and complete it. If you can complete it tomorrow, so good only. Okay. Thank you very much. We'll meet next day, means on Monday. Till then, bye bye. Take care. Enjoy your remaining day. Live class. Already I have informed that tomorrow we are not meeting. So we are meeting on Monday. You also be ready with all the questions and MCQs, also try to complete it. Bye bye.